Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Okay, I think that's good. All right. Good morning. Good morning. It's 11:24 UK time. I was going to start in 6 minutes, but I originally said I was going to start at 11, so it's all good. I'm here in UK. I'm here in the UK time. Oh, what's that? It's better. It's better. All right. Let's go straight into Bitcoin and what I said last week on Friday. So apologies. Usually I stream on Fridays. My name is Amir. I'm a crypto enthusiast. My channel is entertainment value only. I'm not trading at the moment, but it's I do sometimes give trading setups based on trade plans and risk to reward with invalidations and take profit targets. Not always, but sometimes. And effectively what I'm doing here is analyzing the market, looking for good places to long, good places to short, and high probability areas, and then just kind of speculating on future price action. And most of the time I'll be looking at candles and patterns just to try and identify what the market's doing. And then I'll usually always look at the order flow as well to see if there's any divergences. So this week I said I was going to kind of delete all my charts. And it's so annoying when you delete your charts because you have to redo all of them. So I think I'm going to have a little bit of an extended live stream this morning. Apologies if you're only here for 2 minutes or 10 minutes. You're just going to have to catch the stream later when I cut it and post it as a separate stream if that's what you want to do. I think it's important, the new year has begun, that we kind of clean our charts up. What I'm going to do is just going to make a copy here. Call it Jan 2026. I like to copy my previous stuff. Oh. And then delete, 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 and then restart, just because it's such a pain to do the Elliott waves again. And I've already done that, and I don't really want to spend time doing that again. Or maybe I should, I don't know. Anyway, let's just start deleting. Oh God, it's such a pain, isn't it? Elliott waves is such a pain. What's that one? Yeah, I don't want to redo the Elliott waves, but I'm going to redo everything else. And here we go. Delete, 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 delete. Lots of deleting. Those are the Wyckoff images. I'll keep those because I don't need to search for them again. Fib time. Let's get rid of all that. Delete, delete, delete. We could keep that one. We can keep these actually, these SPs. We keep the SPs because I'll have to redo them anyway. We'll have a look at the NPOCs. Get rid of this. Oh, look at that. Wow. That's actually pretty interesting, yeah. Get rid of that. We'll get rid of it anyway. I'll keep that one. Get rid of these. Excuse me. What's this one? Get rid of all of these. What these? Get rid of those. Rubbish, rubbish. It's quite interesting. Could have a look at that. Look at these channels. Ooh, that's an important one. You see that? That's quite important. Previous all-time highs. It just saves doing it again because I'm going to have to do it again. So there's no point redoing certain things which I'm going to redo. I can just update it. It saves a bit of time. These channels are pretty good. Previous range. And keep all of that. So even though effectively I've deleted, even though I'm keeping stuff, it just means I don't have to waste time creating new folders. Let me get rid of the volume here. We have a clean chart. Effectively, we have a clean chart. And we're looking at Bitcoin. I'm going to start looking at higher time frame candles. And what do we have? What do we see here? We see... So, just looking at the candles, last year was a red doji, huh? With a swing failure of the highs. It's interesting because people were expecting a green year and it was red, yeah? Because here you had green, 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 and here you have green, green, red. So effectively this candle here, this red one, is mimicking this green candle. Effectively. So I do wonder if next year we go down further, just because that's pretty bearish, huh? It's a pretty bearish red doji in the highs on the yearly time frame, the 6 months, and this 6 month candle was pretty. This is a reversal pattern here. You see that this 6 month candle closed lower than the previous 6 month candle high. We had a swing failure here, and we haven't closed lower, but we're getting a reversal here on the 6 month time frame. Do you see that? So usually with these, we might go up one more time and then reject. If you can perceive the future, if you can imagine the future, you're not really expecting this to just go up and up and up and up. It's just a floating red candle, so like a big sell candle with a swing failure. It's pretty bearish. 6 monthly candle. Let's have a look at the 3 month candle. This is a bearish engulfing 3 monthly candle. Do you see that? That's a bearish engulfing. What's the volume? Increasing volume with a swing failure. It's a bearish candle, huh? This whole thing is a bearish reversal here on the 3 month time frame. So we're getting indications here of bearishness at the highs. And it doesn't necessarily mean the whole thing is bearish or suddenly everything is bearish, in the sense that if you look at the higher time frame, you know, you're still putting in higher highs and higher lows. It's just that here we've kind of reached a failure point where the price is just struggling to go up, isn't it? It's struggling. Now, what happens next? Well, it's just good to look at these higher time frame candles and analyze what they're telling us. 6 monthly bearish, 12 monthly bearish, 3 monthly bearish. Doesn't mean it can't go up. Doesn't mean the whole thing is bearish. It just means that in this time frame we're looking at something bearish. With this 12 monthly candle, you could easily go down. You can easily go up. Either put in a lower high or even do another swing failure. Go all the way back down and fall down for a bearish reversal. You could just go straight down. I don't think it's likely. I think it's more likely to go up and then to go down. Trap longs and then plummet. And then you're coming into this kind of yearly red candle, this big major order block here, this big one, this big red order block. And effectively that becomes your higher time frame buy zone, starting at around $47,000, $48,000. all the way down to the bottom of this candle, which is 15,000. That's your massive yearly order block. And what you want to see on a higher time frame in terms of candles is you want to see that order block start to get filled and hold as support effectively. If you get that behavior, then the next year we can go up, and then maybe we continue type thing. And then what you want to see is bullish reversals into these higher time frame candles. On the 6 monthly time frame, look at this: 6 months up, 6 months up, 6 months up, 6 months up, 6 months up. So you have 24 is it 24? 5, I don't know, 30 months of up only on Bitcoin. 30 months up only. That's the longest up only we've had, isn't it? It was even more bullish than this one, which is only 24 months. Look, that's 24 months up only. This is 30 months. So actually, even though we have a red yearly candle, when you go to the 6 monthly candles, you're seeing actually it was just as bullish, or even more bullish. Bitcoin went up 500% there. About 500%. It's about the same as the last bull market, except that there was no crazy alt season as there was last year. I mean, last bull market. On the 3 monthly time frame. Now, the good thing about the 3 monthly time frame is that we're getting these kind of red intermediary order blocks. These red ones. You see, there's 1, 2. There's one there. We're into one now. It's at the highs, and then we've got this. So very different to this market here, where on the 3 month time frame it was just up, up, up. And naturally, when you get this kind of up, 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 you get down, down, down. When you have these red candles, they act as support, every single one. So the price doesn't just go through them easily, because that's where large orders are placed on these higher time frame order blocks. Usually where the body begins to where the body ends, all the way down to the bottom of the wick. Kind of where the body begins to the body ends. That's kind of where you get in the big orders, these massive orders, high areas of liquidity, and that's where you expect the price to stutter, to stall, to find support, and then reverse to go back up. And so, whereas before we had a straight up and straight down, look, straight up and then dead cat bounce and then down, I don't expect the same kind of behavior as the last bull market, just simply because of the way the price has ascended. It hasn't done the same thing. So as you come down, even if we go up now and we lose this, clear these orders, we're going to come down into another one right there. Yeah, and then if we lose that, then there's a big gap, isn't there? From there to there. And so you're not just going to get straight down. I don't think so. That's highly unlikely. It's more likely that we go down, fill orders, go up, come down, go up. If we're going to go down, just looking at the candles, but it is bearish. We are seeing bearish reversal. This is a bearish engulfing 3 monthly candle. This is a bearish reversal on the 6 monthly. Structure is a bearish reversal. We've taken the highs, the all-time high. It's a swing failure. And the early time frame is just a bearish doji with a swing failure. It's bearish. There's no denying what we're seeing right now in the charts. Oops. Weekly time frame. Getting a little bit of consolidation here. As I said last week, it's kind of sitting somewhere above this consolidation area here, kind of in the same area. We had the same thing here. The price came down. This was more bullish because it couldn't get in, whereas here we're clearing the liquidity. So I still think we're probably more likely than not to go up for a lower high. Just looking at what we're looking at now. Now, you could get a higher high and then depending on how we go up. If we go up really fast, then you could just reject like that, couldn't you? But I don't think we're just going to go bam. That makes no sense whatsoever. I just think that's highly unlikely. The minute we start hitting these liquidity area here, you're going to get heavy selling again. A lot of trapped liquidity in these highs. A lot of people are still waiting, wondering if the bull market is over, and they will sell. And so it's more likely than not, if we do go up, that we'll get a keen rejection for a lower high. And if we go up fast, then we'll come down fast. And if it starts to come down fast, there may not be enough liquidity, because we're clearing it, aren't we? Look how far this wick went down. We're clearing the liquidity from this area. Lower low, lower high, and then straight down into this kind of next zone here. That's basically what you're looking at the moment when you're looking at the charts. And then it gets really bearish because people are looking at this head and shoulders pattern. If that was to happen, it would be a really nice head and shoulders pattern with a back test off the lows, and then you're looking at a 1-to-1 type situation to the neckline. We're looking to come to the low of this next order block, 54 whatever. And as always, when Bitcoin drops, it really drops. So you might be thinking, oh yeah, I'm going to come in at 55, and then suddenly you see the price all the way down at 47, and what do? You panic. You don't necessarily buy, but actually anything in these lows would be an amazing buy. Anywhere in these lows would be an amazing buy if we got that opportunity. And it would be a 1-to-1. It would be kind of the full extension of a head and shoulders pattern. You wouldn't expect this head and shoulders pattern to extend beyond that. That would kind of be the end. And maybe that would be the end. Maybe that's when it starts to go up. The only caveat in that situation, let me delete these again, is a head and shoulders fake out. I talked about head and shoulders fake out in the past. You have a very bearish pattern forming here where you have this kind of head and shoulders neckline. It's not high probability. It's low probability, okay? But it's extremely bullish. This is starting to form a bearish situation. Bullish in a short time, bearish in the higher time frame, where you form a head and shoulders pattern. You have a clean neckline break, but actually there's a massive liquidity grab here, and you reclaim the neckline. Low probability, but if that happened, that would be really bullish. So you go from extreme bearishness, which is a lower low with a neckline break, but you reclaim the neckline. It'd be very different to a rejection off the neckline. Rejection, so that's the difference. A rejection off a neckline to a reclaim off a neckline. The reclaim is really bullish, and that would be like this. And a bearish one, and it doesn't have to go as high as I'm saying, because it could be much lower, would be some kind of back test and then continuation to the downside. Yeah. And in that situation, you have to be patient and wait for it to happen, rather than presume that this is going to be bullish because you're bullish, or you just have to see what the charts are saying and see what the order flow is saying. So in that situation, you couldn't effectively, if you were to catch a swing failure here, people would sell into that, and then if there's a reclaim, then they could long it off a back test, off a reclaim, and that would be, otherwise it's a rejection and you're going down. Okay, so that's kind of the patterns. And even though I'm seeing higher time frame bearishness, the reality is I'm actually quite bullish. Overall, I'm bullish because look, it's bullish, isn't it? It's bullish. Overall, it's bullish. High highs, high lows, high highs, high lows, higher highs, higher time frame. We're just looking for a higher low now, aren't we? On a higher time frame. So even though we've overextended and we're exhausted, we're finding a little bit of exhaustion here. high low, high high, high. It could just keep on going forever. High high, high low, and a higher time frame. But it's a higher time frame, so you have to bear that in mind. So you have to be patient. And in the short term, I'm feeling bullish. Why? Well, because I was talking about the possibility of some kind of Wyckoff accumulation here last week. Now, we haven't had the ST in phase B yet. Okay. And I think it's more likely than not we're looking at a schematic 2 without a spring. And maybe we go up to put in a lower high here without taking the highs there. Oh, no, not necessarily. I'm just looking at this and just wondering, actually. I am wondering if this ST in phase B is here and we haven't actually managed to take out these lows. Because it's taking too long, isn't it? And usually with this kind of drop from the top of the AR, you just go down, down, down. And we haven't been able to do that. And now we're kind of just slowly grinding up, which is like this. Yeah, I don't know, actually. There has to be a spring. So if we're going to get an impulsive move to the upside, it's going to be from a spring, from some kind of low, pivot low. Impulsive moves are always from the lows. And I can't really see any impulsive move here yet. It's just kind of going sideways, range bound. I am inclined to think that we bam like that. I still think that. To take out the liquidity from that low, get people really bearish, and then snap out of this. But I don't know. Anyway, that's just kind of food for thought in the meantime. Let me go to update all the levels in Bitcoin. I'll quickly run through the volume. This is the higher time frame volume. So I'm on the daily time frame at the moment. Yeah. No changes there. What else is there? Let's have a look at these volumes. Previous range volume, that's not changed. Higher range volumes. We can get rid of that. Don't need that. Overall volume, we need that. Let's have a look at the overall volume. This is on the Bybit inverse perpetuals chart. Yeah, not much changes. We've got a big area of support at around somewhere between $52,000 to $57,000. Previous all-time highs. They're important. Look at these channels. Yeah, we're kind of finding resistance of 91k. Probably it's a tricky one. So the Elliott wave, 1, 2, 3, 4, 5. A, B, C. Let's forget about Elliott waves. Bull market volume. Let's have a look at the bull market volume. Interesting. So look, you see the value area of the bull market value area has gone up to there. So we're kind of trading at the moment inside the value area. A couple of new high volume node there. One there and one there. What's that one? Get rid of that. Don't need that. Higher range volume. Did I update that? I think I did. Okay, higher time frame levels. Let's start with the monthly level. And clean this up. Monthly is in purple. So what am I doing? We have a monthly level there. We have this washed monthly here. Weekly levels. We have this untapped weekly there. There's an untapped weekly there, and there's an untapped weekly there. We've hit that one. We've hit this one. We've hit this one. If this week is green, which it will be, I think, we'll have a weekly level here. Unless something drastic happens this weekend. Go to daily levels. Yep, that one was green. Oops, can't spell. That was a bit of a daily reclaim here. It's washed, but it's a reclaim. See that? We have a daily up there, and that's basically it. For our levels, let's have a look at N naked points of control. Have a look at the order flow now on XO charts. It's also useful looking at the order flow to see if there's any kind of divergences. Yeah, we're getting some bullish, local bullish divergence here. You see the CVD's going down. The price isn't going down. CVD's putting in lower lows. You see that? CVD's putting in low lows. The price is putting in higher lows. So we're getting some bullish absorption here. And just locally, just in the last hour and a half or so. And across the range, there was some really strong bullish divergence here. You see that? When the CVD put in a big lower low, and then the price put in a big higher low, and then I think traders already taken their profit if they took that. We are underneath the daily open and the daily VWAP. And so even though we're getting a little bit of bullish divergence, it is still bearish until we've reclaimed that in that sense. But the bullish divergence makes you think, well, we're starting to get a little bit of weekend absorption here. So could they get trapped and for the price to go down? Or I think whatever's going on right now, it looks like just normal range bound behavior. Let's have a look and see if there's any single prints first. Zoom back a bit. There you got some big ones there. What is that? That's a buying tail. Single prints. Just that one there. I think I marked it off. Let's clear this now. Let me have a look. No, I haven't marked it off. I'm going to type it in chat. Then I'll transfer it to the charts. New single prints there. Starting to get laggy, huh? All of these have been filled. Just looking at them. There's a big single print block there. Look at that. Let's try that. I think we filled it 87,593. Yeah, we already filled that. How far does it go back? Not far enough. Oh, maybe it does. These are filled. Any lower down? No. That was the big drop in liquidation with a buying tail. Not buying tail there. Let's see if we go up here and see where there are any single prints. Filled, filled, filled. There you go, there's some more there. They haven't been filled yet. 9759 298 998. Some more there. See that? Single prints 100 206 2. Can't read it. It's tiny though. 854. Oh shit! Did I type that wrong? 206 2100. You have a big block there. You see that? That's been tapped, but it hasn't been filled. So 103 679 to 104 584. Go back even further. It's going quite high now. I don't know if this might ExoCharts is going to let us go back. Let's see. How far back would it go? No, that's it. All right. Have to refresh this because it's lagged. Let's look at the daily impox. Is that daily? Yeah. Naked daily point of control. $87760. Oh, there's a big one there. 92340. There's a big one down here. 81880. See those red lines? They're daily naked points of control. So they're kind of liquidity areas where the price often comes back to collect liquidity. 104,920. $113,900. 124,800. And 126,160. Okay. Let's look at the weekly. So this is weekly naked point of control, or naked weekly point of control. $91096. Is that right? Yep. Oop, there's one down there. 82,000. $96374. $124,800. Go to the monthly. $91349. Any more? Oops, not loading. Refresh it again. Oh, it's not loading. It's annoying. Maybe I already have it. All right. Let's have a look at the session. Anything interesting? Nothing really. It's kind of, as long as we're underneath the VWAP and the daily open, we're kind of not really bullish. All right, there we get the first bearish CVD. See that? So this is bearish because the CVD is going up. The price isn't going up. It's actually kind of going down. So we're getting a little bit bullish here, but then it's kind of flipped bearish because the CVD is actually trying to go higher. And you can see the lower highs are forming. So this is starting to form a little bit, starting to become quite bearish now. Okay, it's just leading a little bit. We're underneath the daily open, underneath the VWAP. So as long as we're underneath, it's typically bearish. And if you start forming bearish CVD, then you're starting to get sell side absorption. All right, let's go back to the main charts. Let's fill these in. Start with the single prints. I think I have a few already. Just what was that one? 960. All right. 90642. It's a bit tedious, isn't it? But that's how this is how it's done. You're gonna spend time making the levels, and then you know where the liquidity is, and then you can start to look for areas of confluence to take trades. That one I've already done. Probably there. One. Nope, it's not there. It's here. 100, 206. 100, 854. It's a small one there. 103,679. 104,584. So these are your single prints going all the way up, which I've done before, which I didn't delete. These are gaps in the market. They act as resistance or support until filled. And then when they fill quite quickly when they do fill. Points of control. Let's start with the dailies, which I did. So we had one from before from lower down, so I didn't go all the way back, but it's still there. This one is cleared. These are cleared now. You see that? They're all cleared. $87760. Oh wow. $92340. 81880. 104920. I think I've got that. 940. 7. 113. Slightly different numbers. Doesn't matter. So, oh, it's back up there, isn't it? That's fine. 24 all the way up there. Okay. The dailies are done. Let's have a look at the weeklies. 91096. Eight to 82,000. Somewhere here. Nine 6,374. Got that. 124,800. Got that. And monthlies. 91349. This one's been cleared. Oh, we got a big strong resistance there. And we've got the one from up there. Is it cleared already? I don't know. Oh yeah, because I couldn't go back that far on the monthly. It's probably still there. All right. All right, that's your naked points of control. So we have all our data now. Let's have a look at the fibs. Fibs are very important because they act as levels of confluence. Go to the highest or the higher time frames. Let's have a look at these fibs. I'm using the log scale. Generally speaking, Bitcoin, you don't need to use log unless you're looking at the overall range. When you're looking at locally, you don't need to, but when you're kind of looking at an exponential move like this, you do. So log is only useful for exponential analysis, but I just keep it on log. I think some people hate it. Some people like it. Whatever. Oops. This is your full fib log. Which low do you take? Do you take the COVID low, or do you go even lower? Doesn't really matter, does it? Let's go to the lowest low here on this biped chart. Only because I can see that we've got a big level here. That's the 382. And we have a flip here. You see that? That's the 236. And you can see on the higher time frame this 50%. There was a little back test here. You can see here the golden pocket reacted, reclaimed, and then it exploded. I kind of like that. So this is the kind of the higher time frame fib. Let me just rename it. Actually, let me create a group here. Fibs. So I don't need to redo it. I can just have the fibs there. Bam, bam. And then we can kind of go locally. We can go from the bear market low here back to the all-time high. And bring it into there again. Any others? Well, I will do an extension here. Let's have a look at this. Wow, look, we got a rejection from this TR pocket. Look at that. So if there's a back test, then that will act as resistance. We can keep that. Let's try it from look at that. You see that? Wow. This was 618 resisted and then broke through. These fibs are really important, aren't they? You see that, don't you? Anyway, that's kind of irrelevant now. Anything else? We can go locally. I don't think I will. Just want to keep this higher time frame fibs. These are really important, the higher time frame ones, because the price always kind of the higher time frame levels always control the price. Even locally it gets really volatile, but the higher time frame really controls the movement. So you kind of have to focus on the higher time frame for areas of significant areas of confluence and liquidity. You could take fibs on every single one of these pivots. Yeah, you could do that. I'm not saying you can't. Every single one, you could say, oh, well, I want a fib from there to there for trading. Right now, look, you see that we're kind of washing this 382 level, but the next fib level is this 50% mark, which is just something. I mean, that's quite important, isn't it? You've got the 50% mark as an area of confluence from this pivot to the all-time high. Don't you see that? You get a reaction. So that's probably quite important too. Let's hide that one. Let's try this pivot here. Just like here, we're in the 236. The 382 is lowered down, probably a bit too far, but then you've got this 50%, which is all the way down here, which would be a good level too. So you've got these kind of key areas, and then you've obviously got the one that I already done. And what I will do with these fibs is, rather than just, because it gets quite messy having all these lines, and so you just kind of save the ones that matter. So in this case, I think the one that matters is the 236 and the 50%. What's that one? This is just the 50 that matters probably, or on the way up, the 236 even. Again. These both matter, just in case you get a lower high or a higher high. Lower high, it could go in and reject there, or higher high could reject there, couldn't it? So both of these matter. Again, probably not all the way down to 50%, but actually all of this is relevant because it's higher time frame, and this is the highest time frame. These all matter too. So now you can see, can't you? You can see where you got big levels of confluence, and you see that somewhere between 52 and 56 is a really strong area to buy, because you've got, relatively speaking, in a small area, you've got 3 major fibs. Okay, and then you add that with your higher time frame levels. You've got these weekly levels there, not single prints. You've got these MPOCs. Look at that, daily MPOC. Anything else? And you've got these big volume levels. Look, value area high, high volume node. Look at that. So when you kind of add it all together, and we'll put the higher range volume with these fibs. I'm going to put single prints. You get a lot of lines. And effectively the lines are areas of liquidity. That's where the price is always searching for liquidity. That's what it does. It's looking for liquidity until it finds it, and then usually the price will reverse and it head to the next zone. And the black areas are like gaps. And when the price moves through the gaps, it moves quite fast. And it's actually where you can make the quickest amount of money when you catch it on the right side of the gap. So let's kind of zoom out to the daily time frame. This is the liquidity. And so you can see here we've got, and here you can do a local fib too. I'm not assuming we're going up. I'm just saying if we go up, you can do a local fib here. What would you do? I think probably golden pocket. That would be the main one. Where did I put those fibs? There they are. Okay. So you get a lot of lines, and at the moment, when you kind of zoom in a little bit, look at where we are. We've got a naked weekly point of control and a naked monthly point of control. We've got a fill of this single prints. You could take a very local fib here. Golden pocket. So you can kind of now start figuring out your trade plan. And I think locally, I would say possibly, even though you've got some resistance here up here, you see you've got like 2 daily levels. You've got, what is that? What do they mark as? A naked daily point of control, a daily level, and a 786. And what you're looking for is a reaction. This is kind of how you do your trade plan. If you're looking to do a trade plan. And what you're looking for is a reaction. So the first one would be here. You need an entry. An entry would be a reaction. And it's based off a trigger point. In this case, it would be a swing failure. So what you're looking for is an SFP. That's really what you want to see. You want to see a swing failure to take out that high. Trap longs, because their longs will long the breakout, won't they? Then they get trapped. So effectively what you're looking for is the price to go up, trap the longs, swing failure, which means to go above this pivot and come back underneath it. That gives you an invalidation. So once you see the swing failure, you've got the pivot high is your invalidation. So then you can take the trade. So you have the invalidation with a slightly wider stop, slightly wider, just in case you get a second swing failure with a fake out and you take a short, and that's your trade. So you have a risk of, in this case, 1, and then the reward, assuming you held the position all the way down to the bottom, that would be the target, the pivot low here. Then you have a risk to reward of 1 to 10. You wouldn't hold it to the bottom. You'd be looking to take profit at support, but depending how the price behaved and moved, you could go down quite fast. You could, it possibly could be this pivot low here, or the golden pocket. And obviously volume levels matter, but you see here we have got some liquidity here, this naked point of control, this weekly level, and this kind of value area low. And so in this case, that will probably be your first take profit. Why? Because the price could reject like that, could go down, find support and go up like that. It could do that. And so you're basically looking for the first area of support in a short to take profit. That will lock in your trade. That means your trade becomes immediately profitable. Then you set to break even, so you can't lose on that trade. And then you let the runner run to the next area of support. Even though, but if we are going to see a big rejection like that, it's possible that we just go down, down, and down. Yeah, like in a push down. That's kind of what you want to see. You want to see it down, down, and down, like a really quick. And the reason why is because if we are going to somehow spring there, you want it to go down fast, because that's how we're going to impulse back up. Yeah, the faster it goes, the easier it becomes to impulse in the other direction. But because you want to protect your trade, you have to take profit at the first area of support, just in case the price finds support and pings right back up. And you don't want to be you don't want to allow a winning trade to turn into a losing trade because you failed to take profit. That's greed overtaking your emotions. Yeah. Whereas you can systematically take your profit and look for the next trade. I think that's probably a swing failure there would be nice. And alternatively, so let me just put that into SFP short. Yeah. And then the other thing I'll be thinking about is if we don't get a swing failure, you hit this higher level, just put in a lower high there, and it's like a failed reclaim, isn't it? It's like a reclaim, you fail it, and then you just go down like that. It'd be harder to take that trade because you do have to wait for some kind of reclaim or failure here, and then you're looking for a back test for a rejection, and then you could short that with a small invalidation, just the local high, assuming that you got that, something like that. But you have to be careful with that, because the problem with that is the minute you flip this area into support, this area, the price could easily go down, find support, and then ping right back up for a back test. Yeah, could always do that. And effectively what's happening is people are shorting, and then they actually add fuel to the fire for the up move. Because reclaiming a level, claiming a level, flipping a level into support from resistance is a sign of strength. So when you flip a level like that, that becomes a sign of strength, and actually that's a trigger to long. Does it make sense? Fails to get through, and that's a trigger to long. So it's a lot more difficult to do that because you have to be patient. You have to wait for a setup locally, some bearishness, rejection, and then you're shorting into support, effectively an SR flip. So it becomes a lot more difficult to take that trade. It's a lot easier to take a swing failure, a clean swing failure like this, just because it's just this easy trade. It's a swing failure and it goes down quite fast and you can quickly lock in your profits. This one, you have to be a bit more patient. And if you don't find support, then you're in a really good position because you've shorted higher up and still probably aiming for the lows. And you get a much better risk to reward. You get, in this case, a 1 to 10. They're both 1 to 10s. It depends on the invalidation. Huh? So if you have a smaller invalidation, you can get a much higher risk to reward. It's always based on the amount that you risk in terms of a percentage of your portfolio. So it doesn't really matter how wide the stop is. What matters is how much of a percentage that stop will affect your portfolio. Usually it's about 0.5%. If you're more aggressive, it's going to be towards 1%. Yeah, but no more. Okay, and so let's just say hypothetically you took that trade, any one of these trades. Let's say you get stopped out. Let's say you don't get stopped out. Let's say you just take this trade, you risk 0.5% of your portfolio. You'll come down, you'll lock in profit, you made like 2%. So you've risked 0.5%, you've made 2%. Then it goes down another whatever, probably make another 2%. It goes down again, you probably make another 2%, whatever. You can like make a 1 to 5 or 1 to 6, something like that. And so you're effectively risking half and you're probably walking away with somewhere between 4-5% as long as you're taking profit. And then because you have the initial rejection here, you can quickly lock in your profit and you can quickly turn that into a risk-free trade. So even if it does find support and ping up, you haven't lost. Yeah, so you don't get sentimental about, oh, I took the trade and didn't go down, I need to keep my short open. No, you don't care because you're aiming for low. If it doesn't go low, you don't care because you've locked it in. You've locked in your profit, so you've made a profit and you're in a risk-free trade. This type of setup would be harder. And then obviously, if that happened and you found support on an SR flip, you'll be looking for a mini. And the problem again, it's always the same. We don't know what's going to happen. So you could also reject from the highs. Something like this. It looks like it's going long, but actually it puts a low high and does that. And you could always find yourself on the wrong side. But then the minute you fall underneath this low, market structure is bearish and you still have a short, another short, but it's not off that top pivot. Then it's like a failed SR flip. It's like a failed auction effectively. It's kind of like a failed auction off that original swing failure level, but now your invalidation is this local high. Because once you come back underneath that level, you're not expecting it to do that. Okay, so you could lose, let's just say hypothetically, you short, you lose that trade, you long, you lose that trade. So you've lost 1%, but actually you've taken this short and you've made it all back plus some. And that's kind of how trading works. I'm not saying this is going to happen. You don't know. And I think the most important thing is to realize that no one knows what's going to happen. No one has a clue, and therefore you're just planning potential longs and shorts based on areas of interest where the price reacts correctly according to what you're thinking. And if it doesn't do it, then don't take the trade. Just wait for the next trade and then move on. That's effectively how it's done. So this is, what would I call that? That would be a failed auction short or reclaim long. That's that one. That's that one. And then going back to the Wyckoff idea, these images, if you remember these images from last week, these ones. If we are looking for an ST in phase B, we're looking to take out this pivot low. We're looking for a reaction, which is taking out the SC. If that happens, I'd like that to happen because it would be easy. It would be an easy long. Maybe off a short. If we get a short rejection, go down in like 5 sharp waves. Bam, bam, bam. Okay. For a swing failure off this pivot low here, that would be really easy. It would be in a really easy long. There. You wait for the reaction, as always. Swing failure. And as you have to mark it longer. When you get the swing failure, you mark it long. You don't limit in, you'd mark it. You don't limit into a swing failure, you mark it long. Otherwise you won't get filled because the price will just keep on running away from you, because traders mark it long and mark it short. They don't limit in, they mark it. They wait for the reaction. You will never get it exactly at the level unless you've got ninja fingers, and then you're looking for an impulsive move. And then based on that Wyckoff image, that one, you're looking to go all the way up, probably to the 886 based on that image, in 5 waves. Phone is ringing. Let's just say we do put a, I don't know, no one really knows what's going to happen. See, even if you did mark it long, you'd still have to take profit, because the reason why you take profit is because you're long, you'd be in a really good position, you'd be really bullish, yeah, this is going to the moon, and then you're in trouble. Huh? It can happen. So you have to take profit. But in this situation, oops, wrong one. Which one was it? Yeah, 886 all the way up to wherever. In 5 waves. For a lower high. Something like that. Like a 1 to 10. If that is the ST in phase B. And the reason why you take profit is because you can always compound the profit on the pullbacks, yeah? So if you do get, like, look, if you do get 5 waves like that, every time it pulls back, you can compound the profit. You take your profit and you can compound it. Take the profit, compound it, take the profit, and then you can compound it. Yeah. And let's just say you get a really good position. You're still in position because you haven't closed your trade. And if you do get an ST in phase B, that pivot won't be taken again, but you've taken profit. Then you can compound it, wait for that to play out, and then sign of strength, and then going up to put in a lower high. Isn't it? So if you do take a swing failure here, that you want to have that position open, but you do want to take profit, but then you can compound it on the pullbacks, don't you? All right. So let's just do that. That's going to be, oh, smoke alarm is testing itself. That's an SFP ST in phase B. Long. All right. So that's kind of some local analysis. Now what I'm going to do is look at something slightly higher time frame. All right. And again, what I'm thinking is the same as what I was thinking last week. I'm thinking that we're forming higher time frame head and shoulders. And we're looking for a right shoulder. Maybe a smaller one, maybe not as big. Just because I think it's going to get really bearish once we start hitting this area. Okay. And maybe not like I mean, if we are doing a little bit of a Wyckoff accumulation, the thing about Wyckoff accumulation is if we do go down and go up, then we kind of go down a little bit, then everyone's going to get really bullish. And because everyone's suddenly gets bullish because they're thinking, okay, this is it, this is the moon, it could always go up and take the high. Yeah. No one knows. No one really knows what's going to happen. Yeah. I think it's not, it would have to be something extremely fundamental for that to happen. It's more likely that we just have a little Wyckoff here and then put in a lower high. It's a more higher probability of that. So until something changes, how would we know? I mean, what's the sign of strength in this situation? Well, look, I've got the higher range volume there. And it's a tricky one, but really what you want to do off this value area for higher prices is we want to flip this value area in the whole lot into support. Okay. So whatever happens here, we're kind of range bound, but I think what needs to happen is we need to flip this area into support. So then this whole zone becomes a support zone. The value area high flips into support. And it's tricky because then you're longing higher, much higher up, 114. But that's, for me, that's more bullish. It'd be a lot easier to long that with a view to break out into price discovery again than to try and long it like this, like here, coming into resistance. Yeah. Just because you want to see strength, you want to see support, you want to see this value area flipped into support. So you're longing much higher up, but at least then you're longing support after a big area has flipped into support, rather than just assuming it's going up and then just because we take out the high, oh, high, long, and actually what happens is it now starts to crash and you can't see the value area flip into support. Actually, that becomes a trigger that becomes a trigger to sell and short rather than to long. Yeah, because then you're looking for a failed auction, another failed auction with a massive liquidity run of the highs. Okay, so actually if you're going to long, it's here, but then you're longing to go back up to the value area high, these high volume nodes, and that's when you can kind of get your levels back up, the single prints, the higher time frame levels, these fib levels. Where are they? Where did I put them? Fibs, let me just bring them there. There you go. Lots of lines. And you're just trying to imagine a future. Now, last week I had this trend line, didn't I? So let me bring the trend line back. That one. That's the outer trend line. Look at it. We're coming into it now. So we're into resistance, aren't we? We're into this trend line. Look, we haven't broken it yet. We're finding resistance here. There's resistance, and I wouldn't mind if we see a kind of like a swing failure and down, maybe tomorrow. That has to break. You want to play it safe, wait for that trend line to a clean break, back test, and I mean, ideally we want to reject, go down, then break, back test, and then long. That at least you've broken that trend line. You know that we're not going to keep on going down, and then you are looking for a swing failure. I mean, you could always get a higher low. No one knows that even though you're expecting ST and phase B for a lower low, for a swing failure, it's always possible that there's so much absorption, there's so many longs, that it just holds a higher low. It's always possible, even though you're expecting lower, just because of the Wyckoff accumulation, it's always possible that you just put in a higher low. And the safety net there is a break, back test, and then continuation, resumption of this breakout type thing. That's where we are. So this is kind of the outer trend line. I'm going to call it the outer trend line. Can I rename it? I think I can. Outer trend line. How does that look with that one? Who knows? And then we're looking for shorts, aren't we? So at the moment, we haven't put in a lower pivot. I'm just basing the fibs off this current pivot, this pivot low that we've put in there. You can see the liquidity. You've got single prints here. These single prints will fill very fast. They're kind of on their own. There's no real confluence here. You'd have to flip this point of control and this naked weekly point of control. So there is kind of a level of take profit there. But if you flip that, you're going up really fast. You flip that area, you can go up really quickly. If that starts to happen, you're probably expecting the price to zap through those single prints really fast. Yeah, just long, just to fill those single prints. And then you're coming into resistance, big resistance. And there's two main areas of resistance. This area is a little bit messy because it's kind of a wide area, lots of levels. And then you're coming into much stronger area here. See that? Where all those lines of confluence are. I don't know if I would expect the price to easily smash through that and to go up to fill the top. I'm not really expecting that. It's kind of unlikely. Okay, it's an extremely low probability. I wouldn't be expecting that. Look at all this confluence here. You've got the value area high, you've got this monthly level, you've got a naked daily point of control, and then slightly above it you've got a daily level, a weekly level, and then you've got this 786. You've got a really strong area of resistance here. It's above this high volume node, so you have to break through that. So you are potentially shorting into support, but it's a strong resistance area. It wouldn't necessarily be easy for the price to break through, but it doesn't mean you're just going to get a quick rejection and that's it. You wouldn't necessarily do this, just simply because to get past this level is going to take a little bit of time. And so let's just say hypothetically, let me just get rid of these again. Let's just say hypothetically we do manage to smash up, somehow get through this level, get through this level. There you're into big resistance, you can't get through, and then here it's not just going to go straight down now, is it? Because it's taken some time to get through these levels, and so in the same way it took the time to get through, you kind of has to take some time to get through again, and then and you're back into whatever, you're back into quick moves. Yeah, and so it becomes, it's not going to be straightforward. That's what I'm saying. Everyone's going to be bullish, long, and then actually the price just slowly descends. People think, oh, this is the consolidation, this is the wedge, long for the moon, and then slap crash. Yeah, there's just not enough liquidity. it's kind of how you expect the price to move. People get it. It would be bullish to reclaim this golden pocket, because, and the thing about Bitcoin is it always overdoes. Like if it goes short, it always sells more. If you expect, like if I'm expecting the golden pocket, yeah, golden pocket, I'm just going to short that. The chances are it's going to go through. Yeah. And then you can say, oh, well, I'm just going to short this high volume node in the monthly. Well, maybe it's just going to go through. So the higher, the better. And probably the most confluence here is that 786. It's quite high up, isn't it? It's like 114. Everyone's going to be super bullish, huh, if we get up to that level. But that's kind of where you want to short, sorry. Let's have a look at this this volume area here. Yeah. And the thing about that, let me just kind of expand it. Let me just go to that one there. Let's just take this whole lot. It might not get up there, and that's the thing. It depends on how, because you have this previous range point of control here. You can see it clearly. We may just actually just kind of get above this, find some resistance there, and that might be it. And that actually throws people off, because yes, we're waiting for this amazing confluence here, but it may not come. So you have to be prepared for that, because actually it might come up to this previous range. It could always reject off the range, but I think it's more likely than not to get back into the range, get everyone bullish, but actually reject off the point of control and then lose the range. And then when you've lost the range, the previous range, then you've also lost the golden pocket. You've like a reclaim of the golden pocket, you lose the golden pocket, and then down. And so the safest place, the safest way is to let the price action play out, wait for a reclaim and a loss, reclaim the value area, and then lose the value area, the previous range value area. Once you've lost it, you're not expecting the price to just zip back up like that, and then you're looking for some kind of short like that. So you've kind of lost the golden pocket, you've lost the value area after you've claimed it. That would be a swing, like a swing short, basically around 105, 106. And then where you're aiming for is all the way down to 53, 52k, something like that. And then if it's offered to you, then you could easily just short that rejection. That would be better, but bam, because you got quite high confluence there. But I mean, it may not come, and that's the thing. It may not come. So you just prepare it. And you have to wait for the reaction. You have to wait for the price to show you that this is an area of resistance. And it'll be really bullish. If that happened, it'd be really bullish. Like, it'd be like the market is like, yes, we're going to the moon. Moon time. We're going to 200k. Everyone is longing. Long. This is it. This is the breakout. We're going to high heavens. It becomes really scary to short when you're scared to short, but it's in the right area of interest and you see a little reaction. That's the area to short. That's a short, not a long. So everyone is longing, that's when you short. With a slightly wider invalidation. All the way down. Potentially a 1 to 16 trade, if that works out. Or if not, you just wait for the sign of strength, wait for the market to get bullish, then wait for the loss, and then wait for the back test, and then you got like a 1 to 12, 1 to 11, like that. Effectively, that's what I'm thinking for a lower high. Then it gets really bearish, because everyone's looking at this gigantic inverse head and shoulders. So we're looking at swing short, lower high. Okay. And now let's just kind of have a look at the higher time frame for a swing long. Now, I've been contemplating two possible scenarios, right? And I've been talking about this. I've been talking about a massive head and shoulders pattern. That's your neckline. And actually the neckline will probably be, if we do take out this low, the neckline is going to be a little bit lower. Let's just kind of see what that looks like. Sorry. I'll do this channel. Let's just say hypothetically it's a bit lower because we take out this pivot low. We can line it up to this pivot here, look. There. That one. Who knows, really? Let me just try and line it up to one of these pivots so it kind of maybe it makes a little bit more sense than just randomness. It's this pivot here. Nope. Which one would I do? So I think that's the neckline pivot. We want to take out that pivot low. Is there anything here? Maybe that one there. Who knows? Maybe. Yeah, maybe that. Who knows? Guesstimation. Again, the assumption is that we do take out this low. I don't know. Take out the low, but you're putting in like a kind of like on the bottom of this channel. And then you see that you got this kind of midpoint here that could also act as resistance. So even though you got this swing short there, look, you see that? Who knows? You could always, if it's really bearish, you could quite easily do that for a really bearish small right shoulder. Who knows? No one knows. Yeah. But when you're shorting, it's better to short as high as possible into areas of confluence. Whatever, rejection. You've got this big head and shoulders pattern now. Let's do it so the timings are a little bit, make more sense. I don't know. Whatever. And in this situation, you do want big moves down. Then you want an accumulation, whatever. And why this area? Well, look, you're coming to backtest this value area high. You've got this high volume node. And what you've got is these fibs, these big fibs, somewhere between 52 and 56. So it's like 3 big fibs, which I marked out. You've got these volume levels. Look, you've got this big weekly level here of 54K. You'll go through these daily levels potentially, but come into this big weekly level. You've got this naked points of control. Where is it? Slightly higher, but you've got this other one, naked daily point. This is a really strong area, 54, 54, 55. And anything else? Mm. People are really bearish because you lose the all-time high. That's kind of what you want. But look at this bull market channel. So this is interesting because I've just kind of squiggled this out. I had this long-term, this previous bull market channel marked out. High time period, head and shoulders, break down like that. And it's effectively what we've got this channel. We've got lots of channels here. Let me hide the ones that don't matter. So this is what you've got, right? You've got this channel from the previous bull market, these two highs and this, look at that. We know that's a good channel because look, we back tested the bottom here. And look, that's another area of confluence there in that area. Look, to go up to the top of the channel for a short there, which is kind of what I was imagining. See that? To the top of that channel. There's another added confluence there for a lower high. And these are like a cup. This is like a big washout. And then this is like a reclaim. So this is quite bullish to get this, find support, but this whole thing becomes a failed auction. This whole thing becomes a failed auction above this channel. So if you do go up, you're not really expecting the price to get through again. Huh? You're expecting for a nice liquidity run, but nice clean back test in the channel and then down. This pivot low will line up with there, which would be midpoint. So it's possible to come down there and have a little bounce, but then like something like that. Not necessarily like that. Okay, but this is the caveat. There's caveats. Okay, so you have to kind of pay attention to caveats. And this is good area because of all the confluence, which I'm kind of mentioned. And then look at it. You're buying the bottom of this rising channel, aren't you? Look, you know it's support. You've got strong confluence. You've got this value area. And when you get your higher time frame levels, you've got that weekly level, that big weekly level. You've got these naked points of control. See that here? And then you've got the fibs. Those big fibs. Yeah. So when you look at that, you're thinking to yourself, wow, this is actually a really good area to long. If we get this. And then the other thing is, on the back of this head and shoulders pattern, you know, you've got a one-to-one move, haven't you? Look at that breakout. That's it. Head and shoulders, one-to-one. That's it. That's the move. It's exhausted now, and you're coming into strong areas of support. That's a big accumulation area right there. I don't think I'm not expecting this. That would make no sense whatsoever. Right? I'm expecting more like this and then up. And then maybe that's it. Maybe we can start going back up again. Maybe that's the bottom of the bear market. This whole thing is a bear market. Lower high, lower low, lower high. We're in a bear market, aren't we? A little bit of a bear market now. And so we're expecting a lower high, and then that's the higher probability, and then break down to come down to this area 50 for a higher low here, potentially, not to take out that pivot low. And what's interesting about that pivot low is you have got an SR flip, a higher time frame horizontal SR flip here. There. We may go down to tap it. It's always possible. But and take the liquidity. But that's a big, I mean, if you go down to 48k, wow, that's a gift. 48k, that's a gift. That would be like, what the hell just happened? People are selling Bitcoin at 48k. That would be buy, 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 not sell, 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 sell. There'd be extreme fear, but that would be like, wow, it'd be a gift. And that would be crazy bearish, and so it'd be good to buy. But if you don't get that and you just get an accumulation zone, then actually this is the area. Okay, so I'm not really looking for trades. I'll be looking for accumulation. The trade would be trade the range and wait for the local setups to go up, rather than, you're not expecting it to just do this. You're not expecting this. So therefore you're not like taking a long and then it'll be a range. You'll form a range, and then you'll get a bottoming pattern of sorts, and then you get lots of fake outs, and then you're looking for a break up. That's what you're looking for, assuming this holds, because as always, it's possible to do that. It's always possible. Yeah. Who knows? No one knows. Well, that's the area. That's the area. If you see that it's starting to hold the support, you start seeing some crazy bullish divergences. The timings are right. It's at the bottom of this channel. You're not really expecting it to come to the bottom of this channel and then just break down. You'll be looking for a pullback, and then maybe then it'll work its way up. Maybe it'll start filling these gaps here, whatever. And then maybe we can kind of somehow squeeze to smash up. Just for a higher low here off this massive fib level. Bottom of the channel, lots of confluence here. That's kind of what I'm thinking. I'm not really thinking continuation to the downside unless something crazy happens, but effectively that's your area. And then you're targeting for short all-time highs, 1 to 10. Now maybe if you started accumulating Bitcoin at 50k, you'd probably be holding for, who knows, 200, whatever, for the next bull market. And then you are looking at some kind of crazy higher time frame breakout. It could just do that then, couldn't it? It's possible, just like gold did once upon a time. Anyway, food for thought. Who knows? It's just higher time frame speculation. High time frame swing long at 54k area. Mark that off. And then the other thing I was kind of thinking about was this, and I just want to kind of contemplate this idea. Who knows? No one knows that, so I'm not like saying it's going to happen. I have no idea. But I've talked about this before. You don't know if it's going to happen until it happens. If it happens, you have to be ready for it. Yeah, and that's why you're thinking about it now. Because the reality is, you could always come into this SR flip here, because there is a massive SR flip in play here. It's a horizontal SR flip. These horizontal SR flips are really powerful. Yeah, we've tested it once. We know this is a big SR flip. We know. Okay. Just mark it. Oh, there you go. SR flip. So we know this is a big SR flip just because you can see, look, 1, 2, that's an SR flip. Now, the next time we hit that, you can long that for a swing long. Yeah. And the interesting thing is, because people are looking at this higher time frame head and shoulders, potentially, see that? Right. And the neckline that they're looking at is whatever pivot we put here. Who knows about this pivot? At the moment, it doesn't look like it's going down, but maybe it does. Who knows? Maybe this is the pivot. Maybe the pivot is here. Who knows? But whatever the pivot is, you've got this neckline, don't you? Look. Some kind of neckline. Whatever. I can't draw, but let's just say there's a neckline like that. Let's just say we don't go down, or we do go down. Whatever happens here, we create this right shoulder. It's really ugly, bearish right shoulder. Everyone's bullish. The price rejects. Then you get crazy selling, because now everyone's like, this head and shoulders pattern is staring in their face, and people are like, get out, sell your crypto out of the markets, because you're not messing. You shouldn't be messing around with a head and shoulders pattern on this kind of grand scale. Yeah, it's so unlikely that the it's just whatever happens. It's just looks. It doesn't work like that. It's not likely. So it's like extremely low probability for this to just now suddenly just go up and up and up like that. And if it did, you'd have to. The trade is that big V-shaped recovery, back test of the neck. That would be the next SR flip, and just to get back in on a back test. And you've just seen that happen, and you're looking to get back in. Whatever happens, that would be the trade, rather than pretending that this is just going to go to the moon. It might. No one knows. That's the thing. No one knows what's going to happen. So you can't just jump in. You just have to be patient. And if it happens, it happens. It's not really what you're expecting, so you can't really plan for that and make preparations. And then, so if you do get a lower high and people are shorting, you fail to reclaim this value area, rejection. You lose the back test of the golden pocket. Shorts pile in. Now you're back at the neckline again, really bearish, lower high, bearish market structure. Everyone is shorting. But usually people short too late or sell too late, don't they? They're not really shorting where they should short here, or sell where they should sell. They go, oh shit, the price is now dropping. I could have sold at 110, 113, whatever. Oh, that's 82, 83. Let me just sell here. Let me short here now, because this is clearly breaking down. And they may be right. But then the price can always... You could always have a massive swing failure of this pivot, big liquidation, bam, swing failure, and all you get is a second test, another back test of this massive higher time frame SR flip. Yeah. And you just got to be careful, because it's always possible to just go back up, test the neckline for continuation. Yeah. And so while it could be a good place to long and take profit, because you're still expecting the price to continue to go down, because you are still looking at a bearish pattern. So it's not really a swing long area. It's more of a kind of like, you could take the long and take profit. And actually it'd be better to short a lower high for continuation, but you are coming to a higher time frame SR flip. That's the point. And if you do get that kind of price action, you could have a lot of big orders somewhere in the 70k range, 70, 73, 71, 70k, which just absorbs the selling en masse, like a massive big absorption. And so whoever it is out there, big whales, whatever, they don't care about Bitcoin at 52k. They're not expecting it. They just want to buy at 72k. They absorb all of the selling, and the price can't get down. And then what you get is a reclaim. That's what you're waiting for. Yeah. And the reclaim would be effectively getting back into this neckline. So you have this clean neckline break. I'm not saying this is high probability. It's just, you just got to be aware of it. You have a clean neckline break, and you have a reclaim of the neckline. Yeah. it looks bearish because you're thinking to yourself, okay, hold on. Oh yeah, another outer trend line. This is bearish. But what you've actually done is you reclaimed the neckline. Okay. And when you have a head and shoulders pattern with a neckline break, coming to this massive horizontal SR flip, which holds as support with bullish divergences here, and then the price comes back into the neckline of you've invalidated this head and shoulders. This head and shoulders pattern would be invalidated, and it'd be a massive bearish pattern, massively invalidated. That becomes ultra bullish. So a bearish pattern which is invalidated is actually a bullish pattern. So you can have a bullish pattern like an inverse head and shoulders, which is just bullish, but you also have to think of an invalidated head and shoulders pattern as like an inverse head and shoulders, bullish, ultra bullish. It's just a different way of looking at it. An invalidated head and shoulders pattern is bullish. To invalidate it, you're coming back into the neckline like that, because you are coming into a major horizontal SR flip. Everyone is looking for lower, but the price, that was the entry, this pivot low here. It comes back up, back into the neckline, and guess what happens? And so in that situation, you're waiting for that to happen. You wait for the neckline to reclaim. You wouldn't even mess around with longing here. You could take that swing failure, but you wouldn't mess about with longing here. You could speculatively long, just in case, but it could always just continue and just go down, so you could lose. But reality is that would be a major long signal to reclaim the neckline of a big higher time frame head and shoulders pattern, and then you're looking for a breakout to the upside. Everyone is looking at this and thinking, oh yeah, this is bearish because we still have this head and shoulders pattern. It's got this outer trend line. It's a lower high, but what actually ends up happening is you break up. So you get people shorting because they're still thinking, oh, this is a really bearish pattern. This is an amazing short. But actually, because you've reclaimed the neckline of a broken neckline of the head and shoulders pattern, it's actually bullish. It's the opposite. And then you get this crazy ping out, and it changes everything. And I'm not saying it's going to happen. I'm just saying if it happens, you'll see it here, rather than you can't wait. You can't pretend it's going to happen. No one knows. But if it does happen, then you know what's coming. All right. And as always, it's not 100%. Nothing's ever 100%. So if for some reason you lose the neckline like that, then again, it goes back to bearish. The neckline becomes the line in the sand. Yeah. So it becomes really quite easy to long or short if you start seeing that, because if you reclaim it, you could long, and if you lose it again, you could just easily short, and it just gives you the ability to know what's coming or trade what's coming, right? So if the market is in sync and there isn't enough liquidity here, you don't get this kind of price action, then breakdown head and shoulders plays out, and people are going, oh damn, I was looking at the head and shoulders, why didn't I trade it? Why was I so bullish? Because it just now the price of Bitcoin is at 52k or 50k. Why didn't I see it? And then they start shorting down here, thinking this is really bearish. Surely Bitcoin is now going down to fill. They'll be going, maybe Bitcoin now is going to go and down, fill these gaps. I'm just going to buy Bitcoin at 30k. But no, actually 50, 54k is probably the right area to long, because you've already moved. But if you do get this crazy price action where the price reclaims, you're going, oh damn, I could have bought Bitcoin at 69k. Why didn't I do it? Oh, it's back at 97. It's a good place to short. But actually, that's kind of where you should be looking to long. You have to reverse your mind, because you have to kind of go in the opposite direction of most people at the right areas. All right, so that's kind of Bitcoin. I'm going to mark this out as again. So higher time frame, head and shoulders, bullish, fake out. All right. So I've kind of gone over everything, haven't I? And if you haven't, if you've just joined me or you haven't looked at you haven't kind of started from the beginning of the stream, go back to the beginning of the stream. I mark out all the levels. I go through local trades. I go through higher time frame trades. I mark out all the liquidity levels. I mark them all out. They're all up to date. Single prints, naked points of control, volume levels, the higher time frame fibs. I mark them all out. I give you my reason and logic for why. The why is really important. You have to understand why. I look at the candles. I analyze the candles on the higher time frame, the 12 monthly, the 6 monthly, the 3 monthly, the monthly, etc. And I look at some possible, it's always possible, it's never 100%. I could be wrong. You always have to go into trading with that mindset. You can't be like, this is going up, this is going down. You always have to think, I could be wrong. And that's why you have a trade plan. That's why you only risk a certain percentage, usually 0.5%. And you have a clear invalidation. You're waiting for the reaction, and then you take profit, and that's it. Move to the next trade, because you could be wrong. Yeah, that's why you don't go all in. And if you're wrong, it doesn't matter, because you lose a trade, you lose 2 trades, and hey, the next trade you get a 1 to 5 or 1 to 6, and you just make back all your losses, plus your account increases in sizes. And if you keep consistent, write it down, learn from your mistakes, make some stats of what works and what doesn't, and then eventually you've got your own kind of system that works for you, and you can just slowly accumulate value. So I've kind of gone over all of that, so let me just go over them as a quick recap. What's that parallel channel? Let me put that in there. That one, yeah. All right, so little SFP short. Let me just kind of zoom in here without bringing back the liquidity levels. Little SFP short here off these highs. That'll be nice. Aiming for the lows. This would be more of a kind of like a failed auction. And then if you flip that level, then you could potentially have a backtest breakout long. You have to wait for the price to show you what it's doing, looking for bullish or bearish divergences on the order flow to confirm the price action. This is kind of like a Wyckoff type idea of a swing failure pattern, ST in phase long B, looking to take out that low. This would be a kind of like a swing short, assuming you've longed, looking to come up all the way either to somewhere 106 or ideally higher up. The best possible place to short would be about 114. And it's also possible to claim the golden pocket, lose the golden pocket, and then if you saw that, then you can short slightly lower down for a change in market structure at around 106 again, somewhere around that. This is the higher time frame head and shoulders pattern you're looking for potentially. We'll break down all the way down to kind of where you would want to long this one. See that? At around 50, somewhere between 50 and 54k, like a bear market low. And this is the fake out idea. That would be a reclaim of swing failure. Yeah, you could long that, but ideally what you want to do is something like that. Wait for the reclaim and then start longing, long the lows, build a long position, and hopefully after the first impulse, then you're looking for a consolidation for the next big impulse, wave 3 to the next, to the breakout. All right, that's kind of what I'm thinking at the moment. That's kind of my Bitcoin analysis for 2026. I'll be analyzing Bitcoin every week, so join me on Fridays usually. my YouTube channel. Please subscribe if you like my video. I'm trying to get to 1,000 subscribers slowly but surely. Once I get to 1,000, I feel good about myself. I can maybe stream a bit more. I don't know. No, I'll probably just keep it once a week. And then that'll be much appreciated. If you like this video, please like and share it. That's Bitcoin. What else can I look at? I could look at some other things, but I don't think I will because I want to move on. Actually, let me just look at the higher time frame on ETH BTC. So this is really interesting, and I just want to kind of, let me delete all this. Yeah, I said I was going to delete all my charts, so I'm going to start deleting all this stuff. I'll keep that EW. Get rid of all the rest. Don't know what they are. Probably rubbish. Stop trend line. Rubbish. Stop price action. Rubbish. Yeah, we can get rid of all that. All right. This is a yearly time frame ETH BTC candle. I think it's really bullish, just simply because you've gone all the way down and you've closed higher than the low. So you've got a really strong buying tail here on the 12 monthly candle. Now, I'm not saying the price can't go down, but look, whatever happens, I think for this to continue being bearish, you have to, the next year, it has to close underneath the previous year low. And so whatever happens, this is bullish. Now, I'm not saying long here. I'm just saying it's looking to be bullish, because if you close with a red candle all the way down here, then you're expecting a reversal here, and the next candle is a green candle, and you've created a reversal in the wick, which is bullish. And obviously you could always go down, find support, usually around 50% of this candle wick, but if it's more bullish than not, it'll be higher up, like 38.2%. Put another wick and then push up with a green candle, and now you're looking at higher time frame, massive reversal here, right? So we're forming a higher time frame bullish reversal here on ETH BTC. But let's look at these other candles. This is a really bullish candle. This 6-month candle is a piercing green candle. You've closed back above this lower, this candle low. This is quite bullish. This is a piercing candle. Now, it could change quite quickly. It could turn red and then it becomes bearish. If it's green, then it's actually looking at a higher time frame reversal here. We're looking at a reversal here. Yeah. Now this could easily go up and then go down and then just put another It's like a Adam and Eve pattern, isn't it? Potentially. Kind of. I don't know. You could do that. It's possible. But anyway, I'm looking at this. I'm feeling quite bullish. We're above the point of control. This is the overall. Look, that's pretty nice. Would you just long there? I mean, possibly, but it's offering support. The minute you lose it, it goes down again. So that kind of does away with the idea of an Adam and Eve pattern. There's also a V-shaped recovery in play here. And then with a V-shape, you're looking at a return to the 50 fib. The problem with that is the 50 fib would lose this point of control. So it'd be difficult to just long that at 50 fib. You'd be looking to long it at the golden pocket. And then ideally you want to get back above the 50 fib to have confirmation that this isn't going down, this is reversing. And then you're coming into the point of control again, and looking at the volume, that becomes major resistance if you lose it. So there are some problems here if you do start losing the point of control. Sometimes consolidation above support is bearish, but the trend is kind of reversed here a little bit. It's just trying to find support. So at the moment, I feel like this is quite bullish, but you could easily kind of fake out to come back down. Yeah, you could always do that, and you get this kind of, all it does is it goes up, gets everyone bullish, but it just comes up to back test the value area high, golden pocket, lose the golden pocket, and psh, down, bounce, head and shoulders pattern, and then psh, down. You could always do that, but it doesn't matter per se necessarily, because it's possible, because whatever happens, as long as you don't close next year below this level, then I think we're looking at a reversal for the year after to spring up, to smash up. Anyway, food for thought. That's just ETH BTC. Where's my Bitcoin dominance? Look at that quickly. Let me just get rid of this shit. Are they important? Maybe not. Get rid of all that shit. I'll keep that higher time frame analysis just for, I don't remember what it was. Let's forget that. So Bitcoin dominance, that's a really bearish candle. It's a swing failure of the high. It's a green candle with a massive selling tail, increase in volume. It's really bearish, this yearly candle, Bitcoin dominance. And so I think we're looking at a reversal here. That's bearish too. It's like a failed auction. And that's a bearish engulfing. We've already kind of gone back up to test. So Bitcoin dominance is looking really bearish. Okay. It's just food for thought. I think if you're looking for a good place to exit altcoins, if we do get like a little alt season in the next month or two, I think it's very possible. Then really what you're looking for is on Bitcoin dominance. I think a lot of people will be looking for a back test of this neckline. Okay, but I think of the 50 fib is probably the better area, the safest area here. This pivot here. That's what I think. And you're kind of, that would be my target. Let's do the volume here as well. It could go lower, and that would be a strong area of confluence because you've got the golden pocket and the value area high. It could totally go, and you see here, according to this, the point of control, we're underneath it. So this is actually really bearish for Bitcoin dominance. And really what I'm thinking of, rather than going all the way down here, which is possible. So I'm not saying it's not possible, but where it began here, this pivot low to this pivot high, it's kind of the 6786 lining up with the 50 fib. Doesn't mean the price is just gonna, it's not a price even, this ratio isn't gonna just, I mean, it will probably go down like that, then maybe one more like that, who knows. And it won't be so slow, it'll be like fast, bam, then one more, and then it goes up again. That's kind of what I'm thinking at the moment, rather than expecting it to go down. Why do I think that? Let me just have a look at this. Yeah, there, see that? Maybe just to come back down to test this outer trend line that we've broken. See this one? this one, and this one. So you've got this kind of big outer trend line. I wouldn't mind another test of that outer trend line. And so it'd be a little bit premature to just kind of reject there without testing it. Maybe go down a little bit lower and really test it just to find support off that. Maybe that's when we exit altcoins, get back into Bitcoin, or just get back into Tether. And that's it. Who knows? But that's kind of what I'm thinking at the moment. And obviously this could change. But looking at the higher time frame candles, as I said, let me just mark this out. Targets for this is looking bearish for Bitcoin dominance. The 6 monthly time frame bearish. It's a bearish candle. That's a bearish engulfing, and it's either we're getting continuation there. It's bearish, and this is looking bearish. So Bitcoin dominance is looking bearish. I'm not feeling it bullish at all on Bitcoin dominance. Okay, that's good news, huh? All right. It's good. We've got some people here. Thanks for joining me. So that's my Bitcoin update, Bitcoin analysis. I'm going to take this. I don't want to lose people because I can see that there's a whole bunch of people here. No one's saying anything. So you're just quietly watching in the shadows. I'm literally going to go for a 2-minute break. And after I come back, I'm going to look at 2 other tokens. I'm going to look at QANX, the QANplatform, and then I'm going to look at TRVL, which is Dtravel, which is the cap that I'm wearing. Hey, Defage, how's it going? Nice to see you. Thank you. Thank you. Thank you for saying hi. Hey, Daryl, TRVL, nice to see you. Welcome. You're just listening while I garden. Good. Thank you. I'm with you in spirit in the gardening. So I'm going to look at QANX. I'm going to look at TRVL. I'm literally going to take a 2-minute break. I wouldn't mind just having a little restroom break. So don't go anywhere. I'll promise you I won't be more than 2 minutes. Okay, I promise you I'll be back in 2 minutes. And then I'll go straight to QANX. And then after that, I'll go straight into TRVL. So give me 2 minutes, all right? Be right back in 2 minutes. Don't go anywhere. Be right back in 2 minutes. Don't go anywhere. Right. Right, I'm back. Thanks for staying with me. So, yes, my name's Amir Sajadi. I'm just an enthusiastic crypto analyst. None of this is financial advice, and I do a weekly stream. I analyze QANX, QANplatform. I analyze Bitcoin. I analyze sometimes some other coins. I analyze TRVL and Dtravel. So here I am just looking at QANX again. Because it's the beginning of a new year, I'm going to delete everything. And so I've been doing this on my other charts. Just delete. Delete. I don't want to delete everything, do I? That's the question. Do you want to delete everything? Yes. Let's delete everything. I'm not even going to look at it. Actually, I am. Delete. It's about time, isn't it? Delete. What's that? Let's get rid of all this shit. Keep that. I might use the higher time frame. What's that image that I had? Oh. Gone. Okay, I like that. I like that one, so I'm going to keep that. Oh, that's interesting. Let's keep that too. We'll keep the volume levels. We'll have to just update them. What's that trend line? And keep that. What's this one? No, let's get rid of it. Rubbish. Lots of deleting, huh? So completely new year, completely new chart on a new year. I'm just keeping some things just in case, so it just saves time. I don't need to redo it because I'll probably have to do it again, so I can just update it. All right, so that's the QANX chart. What is QANplatform? If people don't know, I have a YouTube channel. I'm on 946 subscribers, so if you enjoy my videos, just give me a like and a subscribe. I'm trying to get to 1,000, and I appreciate the support. You get most of your information from QANplatform, from the Telegram channels. This is the one that I'm usually kind of posting. This is the QANplatform QANX Trading Unofficial. This is kind of where you should join. That's the link. I'll post it into chat. Join it. That's where you can chat about the price action and go pump, and no one's going to ban you. You can have a little wine if you want. This is the official channel, the QANplatform official channel. I'll post that again in chat. That's where you're going to get all the information, the official information. I am in no ways affiliated or associated with this project. It's just for fun. It's all entertainment. I like the community. I like the idea of the QANplatform. I think it's smart. I think it's a real world project that could be quantum computing could have a significant threat against all the layer ones in the future, and that's why I'm interested in this. And they have a lot of big partnerships. If you go to X and type in QANplatform, that's the official X page. That's where you're going to get the big updates. So look at this. The last update, 30th December 2025. 2025 was QANplatform's year of quantum safe breakthroughs. QVM passed Hacken's 2800 test audit. QANX Link passed Hacken quantum security audit, protecting Bank's 2.2 million customers with Sign Quantum. Latin America expansion into via Sign Quantum and ITTI. Or is that a one? Don't know. Blockchain for Europe membership plus CTO panel with Europol. Full recap live now. Okay, so you can go and have a look at the updates. So I'm quite interested in this project just simply because quantum computing is a big threat to encryption, and in the future it's possible that it breaks all the layer ones, and if that happens, then the value will transfer quickly from all the layer ones into layer one resistant, quantum resistant layer ones like this, and the layer twos will then quickly transition from the broken layer ones to these quantum resistant layer ones. That's what layer twos can do. They can transition, they can change, and so that then this becomes extremely valuable, and you get a crazy pump, like the once in a lifetime pump, where everyone becomes a millionaire or a billionaire or whatever. That's why I'm interested in this. So I've been analyzing this for a year. Sometimes I'm right, sometimes I'm wrong. It's not financial advice. It's mainly entertainment. The community is vibrant and they're active and they're fun. They're good chaps. And so, yeah, why not? So let's just kind of have a look at the charts. I'll start with the yearly time frame candles. So it closed higher than last year, right? Than the low, with a swing failure. This is potentially a reversal area here, but it's also a reversal here. This is actually in some ways bearish because you've got a big reversal here. Not only have you lost all of the increase in value, you've closed lower than there. I see this as a reversal, to be honest with you, a higher time frame reversal. I'm not crazy bullish about this yearly time frame candle. Okay, but as always, look at this. It's taken the lows here, and you could see a reversal here, or you could just to go up, but then you could also go right back down. Yeah, so it's a challenging candle. I'm not crazy bullish about this candle. Let's have a look at the 6-month time frame. For me, this is bearish. It's bearish because we close lower. And while I don't necessarily immediately expect this to just drop, if it goes up, I think I'll be looking to sell until I see a reversal, until I see a higher time frame reversal, which gives me confidence that it's some kind of crazy fake out. I'm feeling quite bearish on the higher time frame here, not crazy bullish. Just looking at the candles, yeah, and I'm just ignoring the fundamentals because I know the mainnet is a different conversation, and that's a game changer. In many ways, that's a game changer, but I'm just being honest. And again, this 3-monthly time frame candle, in some ways it's bearish and in some ways it's bullish. It's bearish because we get a clean close underneath this level. It's bullish because we've got a really strong buying tail here. You see that? So the volume is quite steady. It'd be nice if it was like higher volume, but it's not. It's kind of like steady volume. So we're getting this kind of steady selling and the price just keeps on dropping. Let's look at have this monthly time frame. Again, this monthly time frame, it would have been better, and it isn't, if we would have closed higher, and we didn't. And so, but the volume is slightly increased. From that pivot low, that level that I gave, the price is, remember 2 weeks ago I gave that level, and the price from that level, it's up 22%. It was a really good level for the price to react, but we got a lower close, and so naturally people have bought and sold, huh? That's what you're getting. Doesn't mean it's going down. And then the other thing we've got is this kind of this really bearish idea, don't we? It's like we've lost this triangle. We've put in a lower low here, so any kind of bullish impulse here has been invalidated. It doesn't mean we can't go up, and anything can happen. But right now we're bearish, huh? We're bearish because the structure is bearish, lower highs, lower lows. Right? Now, this is good news. Last week we put in this bullish engulfing candle on the weekly time. This is a bullish engulfing. That's nice. That's really nice to see. Look at the volume. It's an increase in volume with a swing failure here. So on the weekly time frame, this is bullish. So higher time frame we're bearish, but highest time frame we're bearish, but kind of like on the mid to high time frame we're actually bullish, because we've got this bullish engulfing on the weekly time frame. Yeah, so that's not bad, huh? We are into resistance. That's your resistance level. It's about 2 cents. But last week we closed above 2 cents. Now we're kind of falling back, but it means that the resistance isn't so strong, because we cleared it quite easily, and now we're just getting a little pullback. It looks, in some ways it looks like a head and shoulders pattern here. If you get back above the neckline, this could do that. It could do that, and then what you're looking at is a bearish pattern, because you've got some sort of, let me just draw it for you. I'm gonna have to I'm just gonna have to find it. Somewhere on the screen, I'm gonna find it. Harmonic patterns, the cheat sheet. These W's would be quite bearish. Here it would be more like a shark, huh? Some kind of shark, or a cipher, shark, cipher. See that? This is the one here. Cipher, shark. That's when you take the point A, which is point A. It looks more like a cipher, to be honest with you. I'm looking at a cipher here. A cipher would be looking to put in take out this pivot B, but looking to put in a lower high here. That's kind of what I'm looking at the moment, right? So let's just get rid of these brush strokes again. Where's that trend line that we had? Let's just draw it again. Let's just have a look at this. Okay. That would be, I mean, this would be really scary, huh? It'd be like, you'd be like breaking out. Everyone's bullish, but you're not able to take that high, and then it'd be an opportunity to sell. It would throw everyone off. And you're actually looking at a bearish harmonic rather than a bullish, something really bullish. Okay, not financial advice. I have no idea. So let's just kind of imagine that for a second. Rename bearish cipher. Oops. Right. That's only because I'm just looking at the higher time frame and I'm just thinking actually this is bearish. And so how would that cipher fit in? How high did I say it would go? Yeah, just kind of going up into the midwick of that yearly time frame, taking out that yearly level and just rejecting. So plausible, just go all the way up and reject and just put in a lower high on the higher time frame. It's plausible, yeah. Don't think just because we're higher time frame bullish on QANX and QANplatform that this can't reject. Yeah, of course it can. Mainnet comes out, everyone is bullish, buy, but actually it becomes the opportunity to sell because of the liquidity. Yeah, because people know that even if QANplatform comes out, Bitcoin is putting in a lower high and coming into massive resistance, and everyone is bullish, and so it's the ability to sell with high volume with liquidity and take profit and exit because people are bearish on the wider market. Now, I'm not saying this is going to happen. I have no idea, not financial advice. I'm just saying it's a possibility. Yeah, everything's possible, and so you just have to be aware of that. Whereas on the weekly time frame, this is a nice bullish engulfing. So possibly looking for a run to drop. Structurally, we are at the moment, we've just put in a lower highs, lower lows, aren't we? So the next kind of thing you'll be looking for is something like that, huh? This looks really bullish. Break the trend line, reclaim the golden pot. Looks really bullish. You lose it, guess what happens? That's what happens. So it becomes a massive fake out, fake break. So it depends how we get up there. If you go up there really fast, bam, 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 hammer, everyone is bullish. This is going to go up and then drop. But you can get the opposite. You could get a breakout and then it actually finds support and then you can go up. That's possible too, and that's why no one knows. No one can predict the future. It's just good to know areas where things could happen. All right, so that's interesting. So anyway, let me just kind of do some things just to show you what I'm looking at. I do this on all my charts, and because it's a new year, I'm just redoing my charts afresh. I'll look at the volume. Did I have the volume here? Yes, I did. So the value area low is lower. I'm going to ignore this post-hack value area now. Just forget about it. Forget about the hack. Okay. That's the volume. Where's the higher time frame levels? So I kind of do this on all my charts. I kind of chuck in these liquidity levels. It's with these like low volume illiquid tokens, it's not as relevant, but it does kind of give good areas where people can buy and sell on slightly higher time frame. These are monthly levels. This is actually this monthly level held, yeah. So I like that. It's washed, but it's held. So that's kind of why I'm kind of in the short term I'm bullish a bit, because we held that, but we did put a lower low. So if we get a reversal here, then we could go up, but it's a wash level now, so it's not a, there's no liquidity there. I'm calling it a wash. Oh shit, what's that? Wash month. I just call it wash monthly, but it did hold, but it just washed it, and then whatever, you got this big gap here. So who knows? Imagine if we came all the way in the future, if we came all the way down to there, that would be the buy of a century. That's monthlies. I did have these before. I'll just delete them now. Just redo them. So easy to do. Doesn't matter. I don't need them. Right. So weekly, let's have a look at the weekly level. So assuming this week is going to be red, it's an assumption, unless we get a crazy pump tomorrow. And then on there. Again, all the way down there. Forget about that, because we know. And then you go to daily. Let's get rid of this volume here. It's a bit of a distraction. Again, see that weekly, there's a daily there. Tapped. On there, on there. It's all gone. Tapped, tapped. And a little bit of liquids because you're not getting clean squares off these drops. That's tapped. It's tapped. There. It's gone. And the one that's there. Let's go all the way back. Wow, I'm going all the way, aren't I? Shit. And then to the lower side. So there's one there here, just that green, that red green. And then look, there's nothing here, so all the way down to this one here, right at the bottom. Right. So that's your kind of higher time frame levels. All right. What's that fib again? So we've got the higher time frame levels, we've got the volume. Let's do the fibs. So there's kind of 2 fibs in play there, I think, or 3 potentially. We've got that pivot to there. maybe that top to bottom is relevant. And we can put these together. Maybe this one from bottom to top here is relevant. Maybe, who knows? Let's just have a look at it from here as well, see what that says. Possible, it's possible too. Right, we got the fibs. So let's just have a look at all of this. Let's just have a look at these fibs again. Don't really like it. I can't see the 236 wasn't really reacting. Maybe this one's better. Yeah, look, see the 50 fib there? It's holding a support. Then the top of that 236. This is good here. Look, see that? The 236 is kind of reacting, and then here you see the 382 is reacting. It looks like the price is moving around these fibs. It does look like it. Maybe that one's better. What's that one like? Yeah, this looks quite good as well. You see the 50s there. That was good. This is the golden pocket area. Like that. We'll keep that one. What's that one? This is just golden pocket, but let's just do full fib. I'm using the log scale just because it works it out in percentages, and because it moves quite a lot of this illiquid token, that you kind of have to use log. Use what you want. Like, I'm not here to tell you what to do. It's just what I prefer. This is kind of more on a lower time frame. It probably is still relevant. Doesn't look like it, but it is. I don't really like this. Probably the next level is that golden pocket and then the 50 fib there. Probably. So what I'm going to do with this one is I'm going to just get rid of these two. Get rid of that. Just keep the higher ones. And that is that. Alright, so we have our fibs. The only other thing I want to do is have a look at this anchored VWAP. So let's just go right back to the beginning. So there's two anchored VWAPs I have in mind. One is from the beginning, and then also one is from here. Pretty much the same area, look, same place. That's the average volume is there. So kind of going horizontal still, isn't it? The price is kind of going up and down around the anchored VWAP. So whenever, you could almost say whenever you're above it, sell. Whenever you're below it, buy. And if everyone took that, like if you can imagine the anchored VWAP as the midpoint, if you sold above it, bought below it, sold above it, bought below it, bought below it. I mean, it's just like you're always winning, huh? In a horizontal market. So we're in buy zone now. We're not in sell zone. We're in the buy zone. We're below it. But otherwise, it's just going sideways, isn't it? It's not really offering support and resistance. It's just going sideways. The price isn't trending. It's just going sideways. It's still going sideways. All right. So let's go back to the weekly time frame. Let's get our levels back up. Higher time frame fibs, higher time frame levels, volume levels. Wow, we've got lots of lines, lots of horizontal lines. What do these lines mean? Well, they're effectively their liquidity levels. They're levels where the price will find some sort of liquidity. The black is the gaps. That's where the price can kind of slip through and move quite fast unless there's a wash level. See, so we're back into this daily level now. See that? So when you look at the daily time frame, you see we're coming back into a daily level. So the price now kind of starts to find a little bit of support. Although that's a brand new daily level, but you see the price finds support off these levels. So the price kind of never goes in straight lines. It goes up and down between these gaps, in between level to level. And these low illiquid tokens, the price moves a lot more. So sometimes it can go through these intermediary levels. It's not like Bitcoin where the price usually respects them. So what you're looking for is areas of significant confluence. Confluence is when you got a shit ton of lines lined up. And so when you kind of zoom in a bit and you're looking for confluence, you see here you have a daily level with a 382. You've got this weekly and daily together. You've got lots of lines, but they're not really lining up until you get to this higher part, which you've got this daily and this 50 fib. Then all the way up, you've got these 2 fibs lined up. And then all the way up, you've got a little bit more of alignment. And then up here, you've got massive liquidity, big resistance, because you've got they're not all at the same place, but you've got this kind of big region where there's a lot of liquidity, i.e. people will be looking to sell. All right, that's kind of doesn't necessarily help. It helps more in Bitcoin. Maybe doesn't help so much, but then when you're looking at the price action now, so if I kind of bring my bearish cipher idea, does this make sense now? Not really. It doesn't really make sense. It doesn't make sense so much because you've got these levels that the price has to get through. But when it comes up to this area, does it make sense? Because you have to get past this value area high. It looks bullish, huh? Reclaim. So the only thing that makes sense here is, look, this daily and monthly level. Look at that level. Look, I've just marked it out. There. That makes sense. Because that's actually where you'd expect the price to find resistance off this big level for a lower high. But it looks really bullish because you've reclaimed this golden pocket, you've broken this trend line. I think it depends how we get there. Because if you start pumping, pump, we're up like 200%. I think unless you get the volume to support the move, you could get people sell into that. And the reason why is because of trapped liquidity. That's what this is. It's trapped liquidity. It's people who've longed and they're technically underwater. And it goes back to what I'm saying about sell above the VWAP, anchored VWAP, buy below the anchored VWAP type thing. Yeah. And so while people are going to be like, this is the next big thing, this is the future, I agree. Yeah, we're on the same page, but it may not be in 3 months' time. It may be in 2 years' time or 3 years' time. And so in the medium time frame or the slightly lower, higher time frame, you're still looking to take profit, aren't you? You're still looking to sell into the highs, buy into the lows. That's kind of what's been going on now for the last few years. So it kind of depends how we get there. And I think the challenge is greed, isn't it? It's like you're fighting your emotions. You know it's going to be big. What do? Do you look at this? Do you just keep on accumulating? Do you take profit? Do you just not look at the charts? Or do you say, hey, wait a minute, I can take a little bit of profit now. Why not? Why not pay myself for all my hard work? Give myself a little payday. I'm in profit. Let me take some profit. If it goes up, I still win. We still win. Yeah, you can't be greedy when you take that mental approach. Take your profit. And then if you get a rejection, you're not upset because you took profit. And if it goes up, then you're not upset because you haven't sold everything. That's kind of a different mindset. But I think that would be a good opportunity, depending on if we go up fast, to look for a reversal. And the minute you lose, see, let's say you get a rejection here. Let's say you do come back into this trend line, that becomes really bearish. It's like a reclaim but loss. You reclaim this area, this golden pocket, but then you lose it, and now you're looking at a really bearish harmonic for a higher time frame lower high. And then what you're getting a situation where you're looking for, I put short, but you can't short on QANX, but you're looking to kind of, and then in this situation, guess where you're going? I mean, your target is the low, but actually it's all the way down here. It's to take out these lows and come in this value area low, this golden pocket area, take out this pivot again. It's a lower high on the higher time frame for another low, for another lower low. Okay. There's a little bit of liquidity in a way. It might not go up in a straight line, but depending on how we get there. So it's just an idea of a good place to take profit. And some people will be like, oh wow, look, QANX is back at 6.5 cents. Let me just sell half, because we're coming into a really good level. It's this monthly level, this daily level. We're above the value area high. Whatever happens, you're not really expecting the price to just pump through the value area high. Volume would change my viewpoint. Like if you, let's say the mainnet launches and you get this God candle, that changes everything. It's just one candle, extremely high volume. That's the caveat. The price is now trading at 10 cents, whatever. That changes everything. I'm not talking about a God candle on the mainnet launch, which takes us up there with high volume, and you can see it on the charts. That's not a bearish pattern. That's just something else. Yeah, that's different. That's not what I'm talking about. I'm talking about, so that's why I say it depends on how we get there. And then you wouldn't sell that. I mean, some people will take profit but then they'd quickly accumulate back in because they see that this is actually really bullish, and you're looking for, that's a clean break. That would be a clean break. It would be a different kind of break. With volume, it would be a different kind of break. You just cleared all that liquidity, high volume, people sold, but the price still went up. It's a completely different price action to something here where we possibly get kind of like 5 waves, struggle, failed auction, back into this trend line, and then we're going down. Right? It's very different. So that's kind of, I think we're bottoming here. I like this bullish weekly engulfing candle. I really do. Yep. I really like it. I like that we took out this low. Doesn't mean we can't revisit lower levels, you know. There's a few levels we could revisit. There's a few we could come back to back test. It's possible to back test these levels here. It's possible, but maybe we can kind of bottom out here. That's kind of what I'm hoping for, expecting right now. A little bit of bottoming here for us to make another move, clear all the liquidity in a kind of mini alt season. So let me just put this into kind of this bearish cipher idea. That's kind of what I'm thinking of right now. Let me get rid of these volume levels higher. Let me just clean this up. Effectively, that's what I'm thinking at the moment. I think it's a good place to long or buy. The reason why I say that, because regardless of me feeling bearish on the 12 monthly or the 6 monthly or the monthly even, the fact is that this is your range low. That's your range high. Maybe even higher. No, let's just say it's there. And we've just come down into the range low. We're at the range low. So it's not bad, is it? It's not a bad place to buy. What else have I got here from the past? What is that? Yeah, I was kind of and this is the other thing. I was looking at this kind of expanded flat. Could that be it? If it is an expanded fat, then we're not really looking for it'd be a completely different situation now, yeah, because if that is an expanded flat, we're not looking, we're looking for the correction to be over, and we're looking for the next wave has to be a mega wave, huh? This is wave 3, so we would expect a crazy move. And so that's why I'm saying it depends what happens next, because if you get, you'd expect like a really crazy volume, high volume God candle for a mega wave, huh? That would be a mainnet launch. And short of that, we could be looking at something like that, a different kind of expanded flat, more to the downside. This could continue. How much did it go above this high? 100%. Could go the same distance. Yeah, maybe the same, like a same kind of balance. And then you get the and all you get here is like that. And so actually this drop, this Y is different, isn't it? So you, instead of getting 5 waves here, there's your ABC. I don't know, I'm just making this up really. Maybe higher. And then depending on how far this C gets, but then you're looking at a different kind of WXY here. I don't know. I mean, it's, who knows? It's all speculative. And it's always possible. This is the other thing. Like I said, we have to see what happens with the volume, because at the moment we've got a little bit of volume here, but it's not much still. Like when you look at the whole range, it's still quite low. So it's not giving us those kind of strong, yes, this is going up vibe. So it's kind of maybe just correcting still. And maybe this part of the correction, it feels bullish, just like it has here or here, but it's still part of the correction. And so everyone is bullish, but actually maybe we go a bit further. And so what I did before was this to there. That doesn't help. Let's try this one. Yeah, maybe August. A 1 to 2 to bottom out there. And actually that could be something else, just looking at it. Let's just say it's like that. I don't know, I'm just making this up really, but so it's still correct. It's still correcting, isn't it? You're still getting these kind of nicely symmetrical geometric shapes, and maybe that was like some kind of ABC, and then bam, 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 to bottom out at the end of September, sorry, end of August type thing. Who knows? Like, it's all speculative. Again, no one knows about the main now. Just because everyone is bullish, you might get some injection of volume. It would be a good place for people to sell. You see, that's the thing. These are kind of sell the news events, aren't they? And again, you have to look at the volume and consider the volume. Volume is really important. So if you get the volume of these crazy god candles, that changes things. With a clean break of this kind of outer trend line that we've been considering. But what if you just come into that trend line and that's it? And so while I was initially contemplating a break, maybe we don't break. Maybe we just come to hit it like that. Yeah. And instead of a bearish cipher, you're not looking at a bearish cipher now. What's a bearish cipher? Let me bring it back. That's a bearish cipher. Maybe you're just looking for a bog standard ABCD type situation from there to there to there to there. It's like an ABCD, isn't it? Does it make sense? So, and it's just kind of like that. And then you're looking to just take out that pivot there on that trend line, another touch, rejection. How does the fibs line up? Let's have a look. Yeah, golden pocket from that. So from this kind of fib here, this pivot here to this pivot low, it's actually a clean golden pocket back test. And you just have to see where the price reacts. There, look at that. So while this is kind of more like a fake out with a bearish cipher, and then you don't really know until you lose the, it's like you're reclaiming the golden pocket, breaking this breakout line. Everyone is bullish, but you lose it, then that's bearish, and then you're going to get selling, right? You don't know until it happens. Yeah, so you kind of have to wait. Whereas this is just a clean back test coming into this value area high, coming into, I don't know, maybe a daily level of a front run. These fibs, got a couple of fibs there, a bit of alignment there, and it's just this outer trend line which doesn't break again. It's just another tap, clean tap into this golden pocket, and actually all you're getting here is just up, down, and it's a swing failure of that pivot there. So if you can't break that pivot, if you're just getting some kind of rejection of a swing failure, so we have to see what happens. So I'm just kind of mapping this out for the possibility of what could happen. And if it happens, then we can kind of say, oh yeah, that happened. That must be, we can actually look at that as an exit point. And then it's slightly lower, isn't it? Get a clean rejection and based on that ABCD pattern. The combo is correction waves, yeah. You can just keep those together. ABCD rejection from outer trend line. Who knows? Not financial advice. So this would be more of a, where's the other one? Bearish cipher. So this is kind of slightly different, this bearish cipher. It's kind of like a fake out with a breakdown, and you can't, it's hard to just take it. You just have to wait. It's kind of, you're almost like selling at the same place. It's just that one is a clean tap down on an ABCD and one is a fake out to the upside, but it's actually a bearish cipher on this harmonic for a lower high, and you get high volume up there, but actually it's a big sell. What else? And then obviously in a bull market, if we do kind of continue this idea, then possibly just based on these fibs, probably looking at the end of August, beginning of September to bottom out, and again just continuing this idea, a 1 to 2 of an expanded flat So it's just a continuation of this expanded flat idea. That's kind of where my mind is at the moment, until that changes. And the change would be mainnet god candle, and the price is now trading all the way up there. Yeah, then you will get a pullback. People will sell into that, but then that changes things, because now you've cleanly broken this downward trend line. Let's say you get let's say the mainnet is launched tomorrow, and then you'll get people sell into that. Of course they will, but this is different because now the price is sold, and now you're looking to reaccumulate for continuation. Yeah, everything changes then. So you can't predict that. And so, well, no, you can't really predict anything. It's just planning for the future. Let me get rid of this trend-based time. Let me put it in this one. Put them together, actually. This trend. Expanded flat WXY with trend line. See, I'm finally organized there. It's amazing when you delete charts, you can actually kind of have some nice analysis, some ideas. Longing, yeah, probably if we do continue to break down off those ideas, then you'll be probably looking for somewhere down here, coming into this previous range here, because that will be the bottom of the bear market. And if you put in a lower high and there's a rejection and Bitcoin starts to go down, then people will sell their altcoins. Doesn't matter. No altcoin will be immune from that. Don't expect any altcoin to survive. And people will be just waiting for Bitcoin to bottom out, show a bit of strength at the bottom of the bear market, and then they'll start to accumulate again. Really looking at this whole structure, you'll be looking for accumulation here in this previous accumulation area here, or distribution area here, there, and then here. That's the right zone. 50 fib, golden pocket. There's no levels here, so you have to wait for the price to show you that this is where it's bottoming. And you want to see volume, okay? Volume is really important. You start to see volume coming here, massive accumulation area. This whole volume profile changes. You start seeing some nice structural bottom with the candles. Then you can go, okay, this is a good place to start accumulating. You don't expect an accumulation pattern to form here for continuation. You don't expect that. You'd expect at the right time, you'd expect an accumulation bottoming at the end of the bear market, and then maybe we can go up, okay? And then that will be the real up. Let me just hide this. I just want to just have a look at a couple of other things. So what is it that I'm looking at? Yeah. No, not really interesting. Nothing here is interesting. Let me try this one now. That's the most interesting one there. Why do I say that? Because here, look at this. Midpoint, midpoint. Yeah. Just if that trend line holds off the top of that channel, then maybe the midpoint will hold again. If we do, let's say we go up there, reject, maybe that is a good place to long. It's a bit lower from this value. Oh, that's because I took that into consideration. Forget that red candle. Unless we take this green as well. Let's see, look at that. Yeah, I don't know. Whatever. I have no idea really. Let's have a look at that fib. Yeah, maybe like, look, it could be, it's possible, huh? Just because we can see the midpoint worked. I want to see a clean touch there, and then I'll be looking for the midpoint. That's what's on my mind. Wherever it lands. So it could push lower, and then it gets people really bearish when you push lower. And you're actually targeting this pivot here. And if you bring your expanded flat idea, well, a balanced expanded flat would be somewhere around there. What if you come all the way down here? Who knows? No one knows. But I do like that midpoint. So maybe, who knows? You just have to kind of keep an eye on these things and say, well, that's a good place at the right time. No one knows. All right, so that's kind of QANX. I like that weekly bullish engulfing. I still think we have to flip 2 cents, but I sold some QANX before this drop. I'm buying back in. I'm kind of feeling like we could go up next 2-3 months to put in a lower high, and just maybe the main net is on people's minds, and so people are going to start aggressively accumulating again. If Bitcoin starts to show a little bit of strength in February or March, then maybe we could get a really nice pump, and then we have to see what happens. All right, that's my QANplatform update. If you like this video, please share and like and subscribe. I'm on X as well. You can follow me if you want. Oh. Oh. I type in my name and I can't find me. X is so stupid, isn't it? I have to search for me. Oh my God. Let me just go to home. So yeah, you can follow me there. I post my weekly tweets or posts. So yesterday I posted it and said I'm going to stream this morning, and I put a live link there. So that will help you plan your day. I'm also going to cut this video. So when I cut this video, if you want, you can share it. I'll be much appreciated. And I always post it in this trading channel. I always post it here anyway. Yeah, live now. And I kind of posted it yesterday, and I'll post the next video. So your support is much appreciated, and it's not financial advice. It's just entertainment value only. It's all for fun. But, you know, why not? Let's have some fun. What's this guy saying? Mid-July, mid-September, 0.08. Who knows? Yeah, like. Look at this. Crypto Nomad says MYX Finance did about 200x in 2 months. Yeah, you see, the thing is, who knows? Like, no one really knows. And while I'm just kind of giving a technical outlook, the reality is, and this is the truth, like Crypto Nomad says, MYX Finance did about 200x in 2 months last year. So we just have to look at the volume. Volume is really important. Yeah. If we get a low volume rise in the context of Bitcoin, then it's more likely than not this is going down. But if we start getting heavy volume, and what that means is that people are buying, you can see the volume is going up, and it's pushing through the selling pressure, the sell pressure, and you're starting to get some really hefty God candles, like buy. But that changes everything. Yeah, it changes everything. So rather than say, yeah, we're going to do 2, and no one knows, but if you start seeing the price go up and the volume is shit, the volume is low and it's good. The volume is the same, flat, and maybe even decreasing volume. Maybe if the green candles continue to decrease and the price goes up, you get some bearish divergences on your indicators. And what does that mean? Let's just say hypothetically, here the price goes up, but the MACD turns, but it kind of doesn't go up. It puts a lower high and this puts in a higher high. Low volume rise, or the opposite even. Maybe on a higher time frame, you get the hidden version, where you put in a lower high and this puts in a higher high, whatever. Because you get selling and the price just can't get through, then it doesn't really matter what you think about other tokens and doing 200x last year. It's just not showing you the signs that this wants to go up, yeah? But when you get the high volume, we're going to see it. We're not just, you can't ignore it. You suddenly see some big volume coming in, these, you can see it, and it's going to be really easy to see. That changes everything. And so when we start seeing that, we'll reanalyze, we'll relook at it, and we'll go, okay, this is different. We're now showing really bullish signs. We're starting to see big volume coming in like that. Bash. Then we see the price go up with the volume. And that, like that. And then we see what we're looking for is a trend line break. And this isn't worked because we've broken the trend line. We haven't come underneath it. I'm looking for us to break it and come underneath it, or reject. Yeah, or reject. And if you don't get that and just goes through, okay, that changes everything. So yeah, now we're this is it. Get ready, guys. We're riding. This is actually what you're looking at is a fake out for the move. And this is the place. This is the moment. This is the place to accumulate. This is the right place, potentially the right time to lock and load right now. So either way, now is the right time. We've got a bullish engulfing weekly candle, which is what we wanted to see. And we've taken out all of these lows all the way to there. We're at the bottom of the range, assuming that this whole thing is some horizontal range. At the very least, you're buying at the bottom of the range. And yeah, this is a good place, good time to accumulate. And then what we all want to see is what happens next. I'm not bearish when I say the candles are bearish. I'm saying the candles are bearish. I have to be careful. I have to be aware. When I look at the higher time frame candles, say this is bearish, it just makes me conscious. Yeah, that's all. Or the 6 month candles are revert. It just makes me, or they close lower, 6 month candle close lower. It just makes me conscious that I need to see the reversal signs to change my mind. Otherwise, I won't be looking for this to go up. I'll be looking for this to reverse as the price goes up. Yeah. But if I start seeing signs of reversal with volume, then obviously I'm just going to look at it on a weekly basis and change my mind. Yeah. It's not a big deal. It doesn't matter. I'll change my mind. If I start seeing signs that this is actually showing me the signs that I want to see, and it's showing me that actually this is the bottom. Yeah. I think it is the bottom for now. But just because I like this weekly bullish engulfing with increasing, we see the increasing volume makes me like this. With this swing failure here, that's the level that I was looking at 2 weeks ago. And last week we took it out, and I told everyone, didn't I? You look at my video last week. Should I go and show you? This is 2 weeks ago. I'll mute the volume. Don't need to listen to myself. Again, I was saying dollar cost average, not financial advice. Look at it. There, you see. See it? Bam. Oh. Where is it? See if I can find the correct. So kind of looking at those lows. There it is. We've taken out these lows, we've lost these lows. Look at that, we've lost these lows, we've lost them. That's the next low there. And then you've got this value area low, and even the value area low is an arbitrary level. So I was looking at that low. Yeah, see that? So this is quite important. Now, that trend line is important. See that? I was looking at that. Sorry, my mic was really shit those 2 weeks ago, so it doesn't sound good. I think I've improved. QANplatform. Where did I draw that? Here it is. Because that trend line has to break for the price to go up, and you can always get a situation when the price goes up and it rejects and it goes right back down. Yeah, and ultimately what you want to see a break, you want to see some kind of back test, and then you want to see, right, whatever, you get the point. So I was looking at that level, and then it happened last week. Right, any questions? Probably not. There's a few people watching. Appreciate your time and your patience. Bitcoin's kind of going up a little bit. All right, I'm going to move on to the next token. What time is it? Oh wow, it's 2:40. I'm just looking at my phone. Oh my god. Oh, this is good. Sorry, give me 1 second. Give me 1 second. I'm going to just move on to the next thing. I just have to answer this message. Sorry, I just had to, I got a booking on my property. All right, let's move on. Thanks for joining me. Appreciate your B-Mark. Yes, it's a pleasure. It's a pleasure. If you missed the Bitcoin one, have a look at the Bitcoin one. I go into depth on Bitcoin. I think it's quite important. Not financial advice, it's just options, ideas. Yeah, it just gives you an overview of places where the price could reject and what could happen. And it's always good to kind of increase your knowledge and understanding of the markets. Liquidity, that's where the price always goes for. It goes for liquidity. I'm going to have a look at the next token. It's this one. We can have a look at TRVL. TRVL is the native token of Dtravel. That's the kind of the hat and t-shirt wear. Again, as always, it's not financial advice. It's do your own research. I'm not employed by Dtravel. I am invested in Dtravel. I mean, I do believe in Dtravel. I'm a true believer. As always, I'm just going to introduce myself. I'm Amir Sajadi. I'm an Airbnb superhost. 4.99 stars, 10 years hosting. I've got properties in London. That's my profile. And I have a crypto channel. It's entertainment value only. It's for fun. And on my channel, I'll do a weekly update on Bitcoin, and I'll have a look at QANX and then I'll also have a look at TRVL. It's all for fun. These low liquid, illiquid tokens. It's just like no one looks at them, so why not look at these two? I like Dtravel because it's a decentralized peer-to-peer real-world application, peer-to-peer. I know it works. I've talked about it in the past. I have my own Dtravel direct booking site. I got a booking this week, so I know it works. This is my profile. This is my own site, but it's hosted by Dtravel. And oh, that's the wrong Telegram. Let me just bring it to the right one. If you look at the Telegram, you'll see in the general channel, look, do you see this one that says new? No, not that one. Not that one. Where is it? Oh, we've had more bookings. Look at that. New booking process, new booking site activated, new booking process, new booking process. Wow. New booking process. Wow, 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 wow. This is yesterday. Look at this. New booking process, direct stay. London, hosted by Amir. That's me. Just processed the direct booking using Dtravel. Revenue earned will be used to buy back TRVL. View listing, and that will take you to my listing. So I know it works. Yeah, that's my 37th direct booking in 3.5 years. And it works. This is a business that works. It's a decentralized real world application. I know it works. Yeah. If you are interested, if you want to know more, have a look at the Dtravel webpage. Do your own research. All the information is there. It's being updated regularly. And there's a lot of changes happening. And this, I've been talking about those changes on my YouTube channel. The most important videos are these ones. Why I'm still bullish on Dtravel, my journey, the history, and what's next. If you're doing your own research, watch that video. The next video to watch is this one, why I'm still bullish on TRVL despite the nightmare crash. Dtravel's rebirth, have a look at that video. And then you can continue that. Dtravel crash, dead coin, or 100% rebirth in 2026, why I'm all in now. Not financial advice, this is just my opinion. I go over the business, I go over the future, I go over ideas of things that are changing. I explain why I still think this is good. Effectively, it goes to the blog post that I keep on talking about. This one, the new chapter. This was on the November the 13th. Unfortunately, since then, we had the Bybit delisting because of it was a low market cap, and Bybit is aggressively going for low market cap tokens. So the sell pressure is off. I talked about that last week. And rather than go into what I've talked about in the previous videos, which is this is the future, this could happen, this is going to happen, we have to, now is a good opportunity because we've oversold. I think a lot of people are waiting for the announcements. Eric Pace has promised announcements. Yesterday on the TRVL channel, there were some comments. People were saying, "Where's Eric? Eric isn't here. He's on holiday and he's not. Where is he?" And I comment and I say, "He is. He's working flat out. He's got a family. It's Christmas. It's New Year's. Like, be gracious." The Dtravel team cares for this much more than we realize. Of course they do. They haven't abandoned ship. They're fighting hard. They're working hard. And ultimately, it's the year. Last year was the year of the snake in Chinese. Well, we're still year of the snake until February the something, 15th or 14th or whatever. You have to release your worry, release your anxiety, be patient. Everything is changing. And I think it's really important that we breathe. Breathe. You can't be anxious or worried because that doesn't help. Yeah, it's a feedback loop. And breathe, be gracious, be anxious, don't be anxious, release it. Oftentimes when things feel like they're going wrong, that's actually the time when things turn around, and this is what I believe. Andrea, wonderful Andrea, happy new year. I totally understand your concern, but Eric has been active here. She answers the question. It's not like he's disappeared at all. And lo and behold, Dtravel community, I'm here. See, Eric answers. Nothing about his status has changed. So rather than jump to conclusions and panic the community, nothing, like, he's here. Like, we don't need to kind of release the stress, release the tension. I think that's important. This is year 2026 is the year of the horse, the year of the fire horse, and this is when the horse runs free with the spirit of fire powering the horse. Anyway, that's a little bit of whatever. It's not financial advice, all entertainment value. What I'm going to do, as I've been doing, is I'm just going to look at the charts. If you've missed it, have a look at my other videos there. I kind of look at Bitcoin in depth. I'm going to break up that stream and put it in my Bitcoin section. I had a look at QANX, which is another token I'm interested in. But the Bitcoin is the main one because that's going to give you the bigger picture. And I think it's important to have a look at the bigger picture. At the moment, it's in the live playlist, what's streaming live. You can have a look at the whole thing later if you look at live, or I'm going to cut it into its own Bitcoin one, and I'll cut it into TRVL, into the TRVL one. So if you miss this, you can just go back and watch. And so what I'm going to do is not talk about the project. I'm going to just look at the charts. Okay, I've been doing this with all these tokens. I've been looking at the charts, and you might think this chart is shit, but still, charts are charts. Yeah, technical analysis is technical analysis, and I'm just going to delete everything. Although, because this is a brand new chart anyway, because I had to recreate it, it's pretty much deleted. So let me just kind of delete this stuff. What's that? It's a trend line. Yeah, so it's pretty much deleted anyway. Get rid of the volume. It's almost like a new chart in any case. Now, the chart that I actually really want to look at is the MEXC one. It's that one. That's actually the most important chart. Yeah, I think I'm going to delete all of this, actually. Pretty much. There's a lot of rubbish there. Okay, I made a mistake. Okay, I should have done it on this one. Right. I did QANX on, I think I did it on this one, didn't I? Oh, that's so annoying. Whatever. Right. Let me go to this one here. Right, that's better. So I'm going to the MEXC chart. Let's delete everything, right? Let's have a look. Delete, 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 delete. Let's just go delete, delete. Just forget about the past. Just look at this chart and think, is it good or bad? Ooh. So look at this. It's interesting how this GAN support, huh? Volume levels. We can keep that. All old stuff. Delete, 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 delete. Just forget about the past. High time frame. As we can kind of keep that folder. Done. Okay, the reason why I'm looking at MEXC is because the all-time high is correct on that, 1.56, and we put in a new all-time low 2 weeks ago or last week, taking out the pivot low, put in a pivot low, and we've got this kind of piercing candle last week, and now we're going to see what happens this week, right? So I'm just going to kind of analyze it afresh. Let's have a look at the yearly time frame. Right. So It's really bearish, huh? Really bearish. One thing that's interesting is a super high volume. It's like a crazy sell-off, yeah? So last year was just a crazy sell-off. What went wrong, huh? What went wrong last year? Well, I've talked about it in my previous video, so I'm not going to talk about it right now. So if you want to know what went wrong, just go and have a look at my YouTube channel. Have a look at those previous videos. I go over depth as to what went wrong, and this is the result. Yeah. Tokenomics, terrible leadership, sloppy communication, like lots of things kind of came together at the worst possible time for the perfect storm. I personally feel that this is an opportunity because we have good people who stayed, true believers, and it kind of clears out all the trash. It clears out all the rubbish. Yeah, we have an opportunity now to change this, to revive this. But this is a really bearish high volume candle. You can't ignore it. It's impossible to ignore. On the 6-month time frame, you've got an increasing volume continuation, really bearish. And we've got this crazy the last 3 months has just been, look at that volume. The volume is ridiculous. This is just MEXC. It's like 2.48 billion. It's like a big sell. What is that? That's basically the Bybit delisting. Everyone who had accumulated on Bybit just sold. They just sold into it. Naturally, with so much volume, the price has actually held up quite well, hasn't it? If you think that the price has only dropped 73%, and look at that red candle there. Look at that red candle there. That price dropped 79%. It dropped more than this candle. And the volume on that candle was 168 million. Whereas now the volume is almost 5 billion and it's dropped less. Yeah. So it's quite interesting to see that there's been a lot of buying, a lot of selling, but a lot of buying too. So a lot of people have been accumulating at these prices. And so it gives people who really are true believers an opportunity to accumulate TRVL because they see the grander picture. They see the potential. They see that this is a peer-to-peer real-world application. It does work. You can see the analytics. You can see the network growth. You can see the value growth. You can see all of that. And so there are people, including myself, who bought the dip. Now, you ask, well, why don't you buy when the price is going up? Because when the price goes up, it's extremely hard to buy. Yeah. Look, you buy a small amount and you get this kind of, the price moves 17%. Yeah. Relatively small amount. That's why. So you buy 2.7 million, which is relatively small, maybe $6,000, and the prices moves away from you 17%. Whereas when the price is coming down, you can absorb the selling. Yeah, so you can catch all of that fill at a single price when the price is coming down. So you get all of your position filled at the price you want when the price is coming down. Whereas when you're trying to buy when the price is moving up, you get filled much farther away from the price that you want, and then you're immediately underwater. Yeah, so like this person bought here and the price moved away from him, and he was already underwater because his average price based on this is 0.001983. So that's why it's better to buy when the price comes down. The difficulty is, what if the price continues going down? Yeah, that's the difficulty. And so, not financial advice, but it's always good to kind of have a dollar cost average when you're looking to buy, and just put limit orders, because then you get filled at the best possible prices. So let's just have a look at the charts. It's all for fun. This is a really ugly candle, but I don't mind it in as much as that it's really high volume. And usually these high volume candles, if they don't fully reverse, usually you'll go back up to test. Usually we'll go back up for a test. Yeah, I don't expect that we're going to continue going down. I think we're going to go back up for a test. Again, the 6 month, we got a selling tail, we got a buying tail. It's the first, like this last 6 month candle here, you see there was a buying tail here, and then the price did go back up to test. And so maybe we do go back up to test. Ooh, my undo isn't working. Sorry, let me just refresh this again. Delete. Let's have a look at the 3 month again. Bearish engulfing 3 month. That's not good. So maybe we do actually go up just to test there. That's what I'm thinking at the moment. This high volume, go up to test. Be like a 250-60% increase in value. This monthly candle is actually quite bullish. It's increasing volume, and we've got this really nice buying tail. You see that? This is actually a bullish candle because you've got, it's like we've put in a pivot, and it's a really nice pivot because when you look at the chart, look at that volume with this buying tail. Now, it doesn't necessarily mean the price is going to just go up because that requires market buying. But when we put in a buying tail here, look, the price kind of, for the next 4 months, it went up, but it was kind of, it stopped. So whatever happens, I don't expect the price to go down. At the very least, just based on historically, 1, 2, 3, 4, at least 4 months, at the very worst case scenario, I expect the price to go sideways. For me, this is worst case scenario for the price to go sideways for the next 4 months. Then we have to see what happens. That would be a repeat of this. And to kind of take out that high at least. Okay. For me, that's worst case scenario. Because of this pivot, if there's no market buying, if the price just kind of oscillates with Bitcoin for the next 3 or 4 months, it would just go sideways and it would just go up and down with Bitcoin, right? And market buying requires people to buy market, because they need to buy as much TRVL because everything's changed, and now they realize they need to buy TRVL and they want to buy as much as they can as quickly as possible, and that changes everything, right? We'll see that when that happens, right? So let me just kind of look at some things. First thing I'm going to do is just work out. Oh my God, what is all this? Let's get rid of these. I thought I got rid of them. Oh my God, what was that? Higher time frame. We'll have a look at those. I thought I deleted these and they're back. Oh, so confusing. Right, perfect. Let's go to the 3 monthly time frame. Monthly time frame, sorry. I'm just marking out liquidity levels. Yep. Weekly levels. Let's mark those out. Maybe a pointless exercise, but I'm just going to mark them out. You never know. It's good. It's good practice in any case. See this one, that's been cleared already. Price went up, tapped it, and then dropped. So it's no longer a level. It's a level, but it's a wash level. So you kind of, you assume the liquidity from that level is cleared. But then here you see the price doesn't go back up. It just continues. And then you've got, this is the first kind of support level here, this weekly level. monthly, weekly, and then we look at dailies. And get rid of that volume. What did I do? Oh my God. That daily's been tapped, cleared of liquidity. Is there one there? No, that's been cleared of liquidity as well. That's the next one there. I'll kind of mark all of these, assuming they haven't been cleared. Haven't done this in a while, huh? It's just for fun. Entertainment value only. Okay. All right, so I think that's it. We could go further, but I don't think there's any point. We have a lot of lines. Effectively, what you have is a real problem. What does that mean? Why have you got all these lines? Well, I'll explain. It means there's a lot of trap liquidity in this drop. It means that it's going to require a lot of volume to clear the trap liquidity. That's what this means. A lot of people are trapped, they're underwater, and all of these levels are levels where people could be break even and they'll sell into effectively, or place just to get out. And so in order to get through all of these levels, you need liquidity, you need the ability to push through with volume. It's just the reality of the charts. I didn't make this up. It's just the way it is. Trap liquidity is a problem, and I'm just kind of going to be really honest. No messing about. Let's draw the volume. So I'm using the MEXC chart. Now this is interesting. So, excuse me. You see how in the past we had the value area was there. Relatively low volume compared to the volume that's coming at these lower levels. Now, this is actually quite bullish. You think it's bearish, but it's not. It's bullish. It's bullish because if this was bearish, you'd have a lot of volume here. And the price would drop and no volume has come in. This would just be relatively flat. And that becomes problematic because the value area stays where it is. And then the price, if it does come up, it finds it difficult to get back in because now you've got trapped liquidity where people are selling. And because it's low volume, it's difficult to get back in because you've got high volume and they're looking to get out. This is slightly different. What we're looking at now is that the volume that's coming is at these levels. And so if and when we do get a rise, even though some people might sell into that, because people are not underwater, they might not sell because it's a psychological thing. When people are in profit, they might not take profit. They're like higher time frame bullish. They got their large stack of TRVL and they're like, I'll just leave this for the long term because I've got a really good position and I'm really bullish on this project. And if the price manages to reverse, then they'll always be in profit because they accumulated at the right price. And that's kind of what this volume is telling us. There's been heavy accumulation, even though it looks bearish, but it's been heavy accumulation, and the volume is actually bullish. It's a really bullish volume. Now you can see that last week we weren't able to come back above the point of control, so technically the average is still slightly underwater, but they're not very much underwater. And if you flip that into support, then there's a chance that we can at the very least go up to test the value area high of this range. Yeah, that would be the correct value, this range. And there is a little bit of a volume node there, a bit of trapped liquidity there at the value area high. Yeah, so there was a bit of accumulation here, and naturally that would be a good place for people to take profit because there is some trapped liquidity. But compared to all of the liquidity up there, I think even though there might be people who are trapped, compared to the volume that we've experienced here, it's relatively low volume. Yeah, so it might not have an impact on the price when the price does eventually in the future go up. I hope I explained that. So even though you've got all these liquidity areas, they might not be as relevant as you think, just simply because the volume is relatively low compared to the volume that's come in here. All right, so let's just kind of look at the let's just update these volume levels. So that's quite interesting. And then let's just do some fibs. And interestingly enough, looking at these fibs, you can see, oh, let me do a full fib. I'm using the log scale. You can see, I mean, it's not easy to see. And because it's a liquid token, maybe the fibs are a bit overextended. You can see that the golden pocket on this back test is slightly above 9 cents, 10 cents. We knew that 9 cents was a resistance area, but actually you can see the resistance, and resistance. That's the midpoint according to this, and then the shade above the all-time low, the previous all-time low. So it's more of a region rather than an actual numbers. Just bear that in mind. So these lines aren't exact. They're like little regions. You can imagine that that's like a whole region there. You can imagine that's like a whole region just because of the illiquid nature of this token, and the golden pocket. The whole thing is a massive region. Yeah. And then here, when you're looking at the 236, it's the same ideas. You can say, well, this is kind of like a region here, isn't it? It's like a region. And so what we have to do for recovery is we need to reflip every level back into support. It's really important. That's how you're going to recover. When the price moves quickly, if we do try to go back up, then we can move up quite quickly. So when you get these kind of drops, it's possible to move up quite quickly. But then you come into previous volume, and then that's when you can find resistance. And that's where people who've taken profit, who are in profit will sell, and that's why people who are trapped will sell. And then you could revisit the lows, and if there's not enough liquidity to hold the lows, you can actually go for a lower high and a lower low. Yeah, it's possible. So just because the bottom is in, it may not be in. Yeah, I put in my title, the bottom is in, but it may be like a midterm bottom, or like a local bottom. Doesn't necessarily mean we've bottomed out. And on the higher time frame, it doesn't look like we're bottomed out. Yeah, because there's no structure, there's no bottoming structure here to tell us, to indicate that we've bottomed. And what we need is a structural change on a higher time frame and with the volume to confirm that this is all changed. And so, like looking at this weekly time frame, we really need to take out that high all the way. Yeah. Take out that high, higher high, higher low, higher high, and then we've changed market structure. On the daily time frame, when you're looking at it, it does look like we've changed structure, because here you put in a lower low, you put in a lower high, lower low, higher high, higher low, higher high. It does look like it. And then obviously if we go down, that will be a lower low, and we're potentially changing structure. If it does that, then we're back into bearish. Yeah, so structure is really important. We just put in a higher high. So if we do keep this low, that could be the higher low. And if we hold this, then we could continue. We could continue this, like this first impulsive move. This could be a correction for another impulse. We have to wait and see what happens. All right, so that's kind of how it is at the moment. Let me put in some more fibs. Yeah, probably that one. So here you can see that we got some fib resistance at about 0.061, which is this zone here. And then we've got this kind of big golden pocket which lines up with this area here. Yeah. And then if you put in the volume levels, well, it's a tricky one because you've got this value area. We could just find resistance here. That would be an increase in value of 200%. And then you have to see how we attack that area. But I'll tell you something, reclaiming a lost area is actually a sign of strength. So we have to see what happens here. If the price manages to kind of reclaim this area and put in a higher high, then actually this becomes quite bullish, because that looks like it could be a bottoming structure if we do form that. You know, we have to see what happens, and it depends on how long it takes. So we don't know yet. Yeah, we don't know what's going to happen yet. I'm just kind of giving my comments as I go. Let me just put these into, I've done this with the other charts and the other tokens. High time frame, fib. Are there any other fibs here? Well, maybe we've got a, let's hide that volume level. Did I do that one? Yep. Where was the midpoint? 4.3 cents. Okay. Oh, wow, that's interesting. Look at that. Wow, that's interesting. Look at that. So we have this really clean channel, haven't we? Bam, bam, bam. Lost it. Bam. Look at that. That's really interesting, huh? That needs to be reversed. So clearly the channel is a downward channel. But it looks like we've bottomed here, doesn't it? It does. When you look at this parallel channel, when you look at this level and this level, you look at the midpoint here and here and here. And this is like a little fake out, lost, and then down, and look where we've come. A perfect parallel downward channel. Okay, so it does look like this is the bottom. It doesn't look like we're going to continue going down and down and down. That would be detrimental. It doesn't look like it at the moment. And we have to see if we can go up. If we do go up, it's also going to cause problems, because when you kind of go up, let's say you do go up, look where you're coming into. You're coming to some confluence where people will sell. you add volume to that. And actually I didn't put this high volume node. I should have done it. It's probably in this value area high as the high volume node according to this. And so that could be like that. We have to be careful about that. To get through that level, we need volume to break through. We need to take out that high. That changes everything, because that is a sign of strength, because we put in a higher high and we're back into this range. Getting back into a previous range is bullish, yeah, as long as you don't lose it again. And it would be a clean break of that midpoint, which has been causing problems, yeah. If you do kind of get through it, then you could maybe attempt to go back up to the top, which would be an attempt to get back up to 2 cents according to this chart. You kind of have to get through the midpoint first to have an attempt at 2 cents. 2 cents is going to be a really strong area for resistance, just because it's this local golden pocket with a 382 and it's the previous all-time low. It's just going to be a really difficult area to get through 2 cents. Just based on this chart, if we do manage to go up, and depending on how we go up, you know, it's a little bit different if you go up, and let's just say we do go up and we just consolidate here. That would be different, yeah. If we overshoot, we get back into this range, that would be a real sign of strength. But if we just kind of pump, whatever, say pump, then it's just a reject, isn't it? You haven't created any kind of structural support or accumulation. And accumulation is like distribution and accumulation, but it's in the same mini range. And effectively what we want to see, and I don't know if we have the time in the context of potentially a bull market in the next, like an alt season market in the next 3 months, but we may actually kind of do this, and then you could go up and then bam, like that. And so you have to be careful of that if that happens. Just have to be careful around 2 cents at the moment, and you have to be careful because from the current price, 2 cents is like a 900% increase in value. And for a lot of people, that's exit with a little bit of profit or break even, and that makes sense. If people feel trapped, then the question is, when the price, if you do reject from 2 cents and the price comes down, are people looking to reaccumulate? And that's when you get like higher time frame reaccumulation patterns, yeah. So it's just food for thought. Let's just have a look at this GAN thing that I did, yeah. So this looks like it's relevant. And again, look, this 3-1, yeah. I never really looked at this much. It's kind of subjective. So I'll keep it there anyway. So that's kind of where we're at. I guess you could argue that all of this is pointless because the chart is just the momentum of the chart is to the downside, okay? And now to look at the momentum, you're kind of looking at moving averages. Look at that. This is the Bollinger Band. It doesn't look good, huh? It doesn't look healthy. Let me kind of go to the other chart. Let me see if it looks better on that one. Nope, it doesn't look good there. Well, I don't know why the Bollinger Band does that. It's weird. Maybe it's on the weekly it does that. The problem is we're kind of underneath this 20 moving average is midpoint, and the good thing about the daily time frame is for the first time we're above it since October. So we are in a little bit of a sideways, at the very least sideways action here at the very least. And the problem is, like on this 3-day time frame, look at it, it's strong to the downside. And on the weekly time frame, look, the momentum of this moving average Look at that, the momentum. Look at that. It just couldn't get up, and that's the problem with momentum. When you got like this crazy downward momentum, the only way to reverse it is like God candles and with high volume, and that changes everything. And look at this monthly time frame. It's like just continuation. The momentum has just been atrocious. So this chart is difficult. It's the truth. We have trap liquidity when the price goes up. If it goes up to 2 cents, that's about an 800 to 900% increase in value. If we do get a crazy bull market and get crazy hype, there's a chance that 2 cents we get a lot of selling. Yeah, and we'll see the volume. If we get kind of high volume into 2 cents, we'll see what happens. And then we'll have to evaluate when that happens. The thing that I've been talking about with the MEXC chart, and let me just bring it back, is this crazy fib time analysis that I did. Let me bring it back again. And so we got this 1 to 2.16618. The 1 to 3 is 25th of May. Yeah, 25th of May. Now, again, with fib time, it's hard to know if we bottom out or top out on fib time. And in the same way that here we bottomed out, we still went down to put in a lower low. So if you could be in a situation where we do this, it kind of does go sideways and then you still go down to bottom out, or it goes up all the way and it rejects in May, you know, like who knows. But fib time is usually where we put in a pivot. Based on this chart, and so we are kind of putting in a pivot here. We can't predict the future. We don't know how it's going to play out. Okay, we have to see what happens. So that's quite an interesting one. But I was looking at another one which was quite interesting. So let me just hide this and zoom out to the monthly time frame. And it was that WXY idea that I had potentially, which I was talking about before. So to there, to there. Okay. And if we do it to that one, to that one. So this gives us a monthly pivot. Let's go to the weekly time frame. Let's kind of make it a little bit more precise. Okay. Just bring that correctly there. Right. So on the weekly time frame, we actually, based on this kind of this weird idea of this WXY, we still haven't hit the 618, which is the beginning of February. So I do wonder actually with this kind of this idea, we do actually really bottom out at the beginning of February. And then here the next one is the 2nd of November. We have to see what happens, but I've got this in my mind as well. It's a slightly different idea. It's more of a higher time frame idea of these pivots. And so effectively it's February and gone to this November 1-to-1. And it may mean we bottom out and we bottom out to create some kind of real bottom here, like a structural bottom, before we get a breakout. That might make sense, because I think with Bitcoin now, people are thinking bear market. And unless we see something completely different, you'd argue that we are in a bear market. It's unless we see something different, yeah, and that could mean that we bottom out. We take a whole year to bottom out. I don't know how low this goes, but when you're kind of looking at, like, when you're kind of contemplating the market cap of TRVL, so let's just have a look at the market cap. This is really important because right now the market cap is $893,000. It's really lower, and the trading volume is actually quite good compared to the market cap. It wouldn't be difficult for 1 or 2 or 3 or 4 big whales to accumulate TRVL at these prices and create a higher time frame low, and just be patiently accumulate here for Bitcoin to whatever bottom in the Bitcoin bear market, for the momentum to kind of diminish, and then in the next crazy bull market, whoever's done that is rich, because then this goes up to 2 cents, 20 cents, whatever. So it is possible. Like these tokens like TRVL, we're on a bunch of exchanges. We lost Bybit, but we're still on Gate.io, we're still on KuCoin, we're still on MEXC. We're in Biconomy, we're on Aerodrome, we're on the base wallet. We have access to liquidity, and so fundamentally what's happening now is that people are a little bit uncertain about the tokenomics. They're a little bit uncertain about the token unlocks, not just the tokenomics, the token unlocks. And naturally that uncertainty makes people hesitate. And once those questions are resolved, there's a little bit less FUD, a little bit less fear, a little bit less uncertainty, a little bit less doubt. Doubt because the previous team didn't communicate well. They were on maternity leave for months and didn't tell anyone. No communication, stuff like that. And now you have people who are communicating, and I think the delays that people are like complaining about, not complaining, but just kind of concerned about, is mainly because Dtravel wants to do, or Eric and a team want to do a really good job. They want to give you something amazing, and they don't just want to come out with a half-hearted bullshit. They want to come out with something fantastic. They want to do this right. And doing this right doesn't just mean giving people what they want. It means coming up with a plan that ticks all the boxes, that is doable operationally, coding wise, and that has real potential for virality, for growth, because there's a market for it and the market needs it. And that's what we're trying to do. We're trying to build something which the market needs, the market wants, and where it could go viral, so that this isn't just a small fledgling startup. This becomes a fully efficient, decentralized business, and where you can accumulate the token and TRVL, and that will effectively become your lifetime savings. That will become your bank. That's kind of what we want, because why wouldn't I want that? I'm not coding, but of course the team want that. Do you think the team are happy that the price of I mean, they've got tokens too. You think they're happy that the token is of course not. Do you think they want the token to be at $2 instead of 0.002? Of course they do. That releases everything. That unlocks them completely. That means they can hire people, coders, build, design, they can do a lot. So they're completely 100% committed to making that happen, and they just want to do this right. That's why that's the feedback I'm getting. I had a conversation with Eric yesterday. I'm going to have a conversation with him today. We're chatting about a few things, but we're just going to have to be patient, unfortunately, and release our anxiety, release our fear. I think it's a really good price to accumulate. Last week was a piercing candle where on QANX or on some other tokens I saw some bullish engulfing. I'd like to see another green candle this week. That for me, that would be a little bit of a reversal, at least on this kind of medium time frame. But unfortunately, because of the crazy selling pressure, the candles don't show a reversal yet on the higher time frame. On the daily time frame, we have a little bit of a market structure change. But because of its low liquidity, it's hard to gauge whether that's accurate or not, because when you're looking at the structure here, you can see that it's kind of looking like an SR flip to the downside. Could you do that? Yeah, it's possible for a double bottom or something else. Or could we revisit the lows? Yeah, it's possible. It is possible. And so I don't want to kind of tell people it's not. We've put in quite a bunch of volume here. One other thing I want to do here on the charts technically is just I'll hide that trend-based time. I'm interested in trend-based time because I know it works. Time. Oh, what is all this stuff? Have I gone? Why have I gone back to that chart? That's the chart. Okay. I'm going to actually close that because it's really annoying. Ooh. Okay, I did it on the wrong chart. It's really bad having two charts. This is the new one, the January 2026. So I'm gonna hide that, but trend-based time again. Okay, and then what I wanted to do. Okay, yeah, I want to have a look at the VWAP. So the anchored VWAP here on MEXC, it's kind of at the previous all-time low. You kind of expect, if we do get a rise, I wouldn't be surprised if we do go back to test the VWAP. And according to this, every time the price has hit this anchored VWAP, once, twice, 3 times, 4 times, it's rejected. This is a trend, so you don't expect this trend to change. At the moment, it's at about 2 cents or 2.1 cents. I'm interested to see how that looks on these other charts. This is Gate. Gate is actually front run it, so it's slightly higher on Gate. And let's have a look at KuCoin. Again, it's the same thing, KuCoin and Gate on MEXC. So I wonder if we do get another test. And I think if we do get a run, it'd be nice to hit that anchored VWAP. That would be a really nice confirmation of a good selling point. And I think maybe that's what we have to do. Like, people who are enthusiastic about Dtravel and TRVL, maybe we all sell into the anchored VWAP and then buy the dip and then make this token bottom out. Okay. If we have the ability to do that collectively, maybe that's the easiest way for us to turn this around collectively. Anyway, not financial advice, but that's interesting. So I'm interested in the anchored VWAP more than anything, because I can clearly see that there's a pattern. And if you kind of tie it in, like at the moment, 2 cents is really, I would love for us to be able to get to 2 cents. I don't know. I don't know if it's possible. We have to see. I think with the changes and the sentiment of the market going back to bullish in the next month or 2 or 3, I think we have a chance to turn this around for a pump, for a massive wave 1, especially if the tokenomics changes. If we can get a mega pump up to 2 cents. I don't know how it would look like a 5 wave move. That would be like our first Elliott wave move. Could this be the first wave? Yeah, could be. That could be like wave 1. We could be in a little correction here for a little wave 3. This could be our first wave, huh? Could be. Could this be a little correction? A, B, C, and then another wave. This here, the VWAP is, oh, it's higher. Is it higher? It's a bit lower on this. Oh, and it depends on the time frames actually. So it's the daily chart that matters. We'd first have to get back above this midpoint, and then yeah, I think possibly just looking at this 2 cents. 2 cents is kind of like the big target. All right. That's kind of my Dtravel TRVL. It's kind of more technical today, and I think if you have an opportunity to look at my previous videos, these are the important ones. Why I'm still bullish, and TRVL crash. It kind of explaining the why, and now we're just waiting for Eric. We're waiting for the team to start giving us some updates on everything that's changing. But regardless of that, this is still working. It's a really sound business. It's a decentralized business. It's just that the problem is that it hasn't grown as fast as we had hoped, and there's been a decorrelation or disconnect between the value of the token and the business, and that's what Dtravel are trying to change, and that's why it's taking a little bit of time. Okay, but we're waiting eagerly for the updates, and until next week, have a good weekend. If you don't mind, I'd appreciate if you could just like my video, if you could share my video, if you could retweet my video. I'm trying to get to 1,000 subscribers here, and so all your help is appreciated. If you can like the TRVL videos, why not? Yeah, that helps, doesn't it? It helps the algorithm, it helps with the marketing, it helps get people to hear more about Dtravel, and every little bit helps. All right, so have a wonderful weekend. So I'll stream again next Friday. This time it was Saturday because I wanted it a bit longer and I wanted to spend some time, but next week I'll be back on Friday. I'll do a shorter stream, and hopefully we'll have some updates from the Dtravel team. So have a wonderful, wonderful weekend and week ahead.